The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I could throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic world. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So, and why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now...
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったの。そういうことが演奏によって起こせるためのそういう器みたいな感じになってきて。初音ミクらしさって僕はあんまりない。初音ミクって何だってあり。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer. But humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness.
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
Expose everything you won't admit. And action. This entire video is based on a true story. When I do like motivational speeches or even tell myself like love yourself and you should love yourself.
This is Lily Singh.
But to fans all over the world, she's the YouTube star Superwoman.
What if everyone to girl, Superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada, was like, Canada, is your daughter making videos? And I think my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're going to go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010, and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms, and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad, and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oh, Lily, where the rest of your skirt, huh? I teach you like this, to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's your girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She starred in a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views and the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rosovsky is the CEO.
It's like a high-powered microscope. And so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rosovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests in a laboratory takes time. There's regulatory approvals. There's a lot of red tape that you have to go through.
Also in this race to diagnose CTE in the blood are Athlon Medical and Exosome Sciences. And New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company. And that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Mouth or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an indicator of all changes that are occurring in the climate system. So we will be able to see some change, big change in global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast. This number will double. I mean, the number of people living in coastal area will double by 2060. So, knowing how much level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
A lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. Keep developing without any regards to natural remedies. There is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is the, let's say, the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
Live from the Bloomberg headquarters in New York City, streaming on YouTube. It is Monday. It feels like a Monday, December 7, 2020. Carol Masser along with Tim Stanovic of Bloomberg Quick Take. I said to you, Mondays are just hard.
They are. And, you know, they don't get any easier.
No, and there's just a lot of stuff that we've got to get to. A lot of virus headlines, stuff that happened over the weekend.
Yeah. And, you know, the stock market not helping us either.
No, right? And just kind of waiting, saying, okay, those virus headlines worry me, folks. Where's our stimulus? Like we
that's exactly what investors are saying.
Yeah.
Where's the stimulus?
Yeah, so we're going to get into that over the next couple of hours. First up, though, let's set your trading day with the one and only Charlie Hillett.
Thank you very much. Happy Monday to you both. Back to work Monday. Do want to begin with a couple of developing stories. First of all, Brexit. British Prime Minister Boris Johnson and European Commission President Ursula von der Leyen have agreed to meet in person in coming days in an effort to find a way around the impasse in trade talks. And billionaire Bill Gross proposing to settle his feud with his Southern California neighbor and end dueling harassment complaints, saying there are more important things to focus on, like the pandemic, than their dispute. Gross issuing a public statement today offering to, quote, end all hostilities with his Laguna Beach neighbor. Stocks falling as traders await details on a new stimulus package, with coronavirus infections sweeping across states and triggering fears of more restrictions. The S&P close to session lows now down 15, a drop of 0.4%. 1%. The Dow is down 216. That is a drop of 0.7%, while NASDAQ up 28, a gain of 0.2%. 10 up 11.30 seconds, 10-year yield 0.92%. Gold up $22 the ounce, up 1.2% at $18.61. Crude down 0.5%, 46.03 a barrel. The Dow underperforming as Intel tumbles on news that Apple is planning a series of new Mac processors for introduction as early as 2021. Right now, we have got Apple shares up 1.3%, Intel shares lower by 4%, and that is a Bloomberg Business Flash.
I love that story, Charlie Pellet. Just a reminder of how times have changed.
Remember how I said, why don't they just reach across the fence and hand one another some cookies or words to that effect?
It's not that easy.
No, but it looks like they have reached agreement, and that was my point.
Wait, are you talking Intel or Apple or
No,
something
I'm
else?
talking billionaire Bill Gross.
I'm talking Intel and Apple.
Oh,
okay.
well, there we go. But that was...
I mean, we could also be talking Brexit, right?
Right. We could be talking Brexit. Like, could we just all hand cookies across borders, across countries?
There we go, and we'd find a solution. But the Gross story was one that certainly a lot of people are following closely. Obviously, Brexit, too, a major
Maybe
story.
they just share caviar, like they're billionaires. I don't know.
Exactly. But you got my point. You got my drift.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. Let's set the Business Week agenda. We've got Gina Martin-Adams, Chief Equity Strategist at Bloomberg Intelligence. She's on the phone in New Jersey. Also from New Jersey on the remote access is Dave Wilson, Stocks Editor at Bloomberg News. Gina, kick it off for us. Another week, a lot of the same kind of big issues, macro issues, headlines that we're still staring at. Yeah, we are still staring at them and dealing with them. How do you see it?
Yeah, well, I think the start of this week is a little bit of give back of extraordinary gains last week. I mean, we were coming off one of the strongest months on record in November. We had a really strong week last week. So far today, we've given back half of Friday's gains. So it's a little bit of give back. I think we got to pretty extreme overbought conditions in the energy sector in particular by the end of last week. That's why we're likely seeing the energy sector as the loss leader on the index, down 2.5%, whereas the S&P 500 is only off 0.5 percentage point. So that tells you a little bit about what's going on broadly, is investors maybe starting to take a little bit of profit in some of the big leaders over the last month. I mean, these are stocks that were up 35% over the month. So really, really strong bounce back.
It's not like it's an abnormal year or anything, or a volatile year, Gina.
Yeah, I know. We're kind of accustomed to these numbers at this point, but I do think it's largely technical more than anything more ominous at bay.
So you don't think it potentially, shows that traders are maybe losing a little patience with Congress and waiting for that stimulus, right?
I think that could be a portion of the story. Certainly, in any given day, we might have a heightened focus on what fiscal policy is going to do. Friday was, there was a little bit more optimism that was likely coming. We didn't get that. We're still not getting it. We seem to be having a difficult time coming to an agreement. Yeah, so that could be a little bit of it, but
someone needs to bring them cookies,
right? If they were completely giving up, we would have a much worse.
Or bop them on the head. Sorry. Dave Wilson, come on in on the trade and what you're seeing.
I'll tell you, it does just look like a bit of pullback as much as anything. It's not like you can go through the 11 main industry groups in the S&P 500 and see all that much of a trend. I mean, that said, you see some of the areas where big tech has an influence holding up relatively well. Technology itself is little change. Communication services, which is Facebook and Google's owner Alphabet, best performer on the day, but it's only up 0.25%. And the consumer discretionary category, including Amazon.com, holding up relatively well too. So, it really then becomes sort of a company by company story. The situation with Intel and Apple, which Charlie Pellet noted. You got Boeing higher, UBS more optimistic about playmakers' prospects, especially as the vaccines get rolled out and people feel more like traveling, and the aerospace industry benefits from that. But beyond that, there isn't a whole lot in terms of sort of obvious themes you can take away from the trading at the moment.
Fair enough. Tesla shares up another 6.3%. Gina, I know you've been writing about Tesla and when they get dumped into the S&P 500. There's no other way to say it, but it will be a huge share price dump or share dump. How do you see it?
Yeah, I think it's going to be fascinating, quite frankly. If
Yeah.
you look at the last time we added a gigantic company, it was Berkshire Hathaway, and I think that's as good a guide as what to expect as anything. Obviously, the stock has run up in advance of its entry as investors are positioning for its ultimate entry. But then what you usually see, both with the large companies that enter as well as across the averages, is the stocks that enter then underperform after they enter the index. So that's a reasonable expectation. Now, what does that do for the index dynamics at large? Well, it probably amplifies this growth to value rotation that we're seeing. Tesla clearly being a growth-oriented stock. Growth stocks have underperformed value pretty significantly over the course of the last several months, and we think the fundamentals are going to support a continuation of that trade. So Tesla might actually amplify that. Beyond Tesla, I think there's some really interesting potential changes as well. I mean, you're looking at now 9% of the market cap of the S&P 500 that doesn't even meet the S&P's committee's stated threshold for inclusion in the index, while 8% of the market cap of the mid-cap index is actually big enough. So you could see tremendous turnover in constituents beyond Tesla, but it's so hard to predict because it is a committee decision, not necessarily a technical decision.
So what does that mean? I mean, what are the implications of that? Does it mean potential volatility, or since it's a committee decision, it's sort of they can control the volatility?
Yeah, because it's a committee decision, I kind of wonder if they're just going to say, okay, Tesla's enough for the market to absorb at this one time and we'll wait. What's really interesting about this right now is normally these major constituent changes happen in the midst of distress. So if you look at the last time that we had a really big turnover in the index, it was in 2009. 2008, 2009, in the middle of the crisis, before the market had really started to rebound. And so these constituent changes create a little bit of stability. You know, you lose the loss leaders and you bring on some stronger companies, and the index starts to show some stabilization. We've already rebounded to new highs, despite the fact that the economics are somewhat tumultuous. The market is in much stronger conditions. So what happens when you bring already high flyers and the market is already starting to rotate to some of those laggards? You lose the impetus of the laggards, right? You lose that upside. So I think the real story here is the growth to value rotation.
Right.
Companies that come in will be growth companies. That's going to probably limit the upside potential of the S&P 500 at large.
All right, good to know, certainly as we look to the market ahead and what we might see. Gina Martin-Adams, thank you so much. Chief Equity Strategist at Bloomberg Intelligence. Dave Wilson's going to be back a little bit later on, our stocks editor at Bloomberg News on the remote access from New Jersey. I'm going to do the Bloomberg Business Week Bite of the Day, if I may. One number that tells us a lot, nice and round, 200%. The super rich are buying luxury goods online like never before. Christie's has seen a 200% increase in the number of digital sales this year, Tim. From November to December, Sotheby's has already quadrupled its year-over-year volume of online sales and quintupled its total.
There's still time to get your holiday shopping done.
But it just like, yeah, right. That K-shaped recovery, right? It's just such the gap. Okay, duly noted though. All right, let's get a check of all the national news headlines. Over to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. The Biden administration is out with its picks for health positions. Dr. Anthony Fauci is chosen as the chief medical advisor to President-elect Joe Biden. California Attorney General Javier Becerra is being tapped to serve as Secretary of Health. And Dr. Vivek Murthy, who previously served as Surgeon General, will once again assume that same position. One of the nation's hotspots is California, where new stay-at-home rules took effect last night for Southern California and a large part of the Central Valley. Dr. George Rutherford is a professor of epidemiology at the University of California, San Francisco. He tells Bloomberg the situation there is not good.
We're having more cases than we've ever had. The ICUs are starting to fill up in the lower San Joaquin Valley between Fresno and Bakersfield. Los Angeles, the whole metropolitan Southern California area, their ICU capacity has fallen below 15%.
The new stay-at-home order will be in place for at least 3 weeks and prohibits gatherings from different households. Georgia's Secretary of State Brad Raffensperger has recertified election results today after a third recount. The Republican says the results have not changed despite allegations from the Trump campaign.
I know there are people that are convinced the election was fraught with problems, but the evidence, the actual evidence, the facts tell us a different story.
Raffensperger says any talk of a stolen election is hurting the state of Georgia. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Massar along with Tim Stenovic of Bloomberg Quick Take. And I have to say, if there is a theme, Tim, it feels like when it comes to kind of our world, especially when the virus, it's like it's going to get a lot darker before it gets better.
Yeah, that's certainly true. And we learned today something that was surprising we hadn't heard earlier from leaders of the state about indoor dining, that it could close sooner than later.
Yeah, exactly. And I think, we're starting to look at, this is why you see that debate of people who are in academia, in schools, are saying, it's not the schools where we're seeing these super spreader events, but you need to be more concerned about the restaurants that have opened, especially the indoor dining, right?
Right. So I in preparation for talking about this, I went and looked at my calendar because I remember the day that was the last time I went inside a restaurant to actually eat.
Yeah.
Wednesday, March 11th. And I remember it because my mom was visiting. We went out to dinner. It's rare we get to go out to dinner because we have a little one. So we got a babysitter. We went out. And we got home, and we found out the NBA had canceled the rest of the season. Remember that night?
I do.
Tom Hanks
Yep.
said he had COVID. That was the day for me that everything changed.
I agree with you. When the sports franchises
Yeah.
started saying, we're not going to do March Madness, we're not going to do, you name it, all of the professional sports leagues, that's when I said, something's weird. Tribeca closed down, the film festival. There were just a lot of things that were kind of iconic in our world, and they just stopped.
So have you eaten inside?
No.
Yeah,
I can't
neither
even
have I.
remember. It's probably the last time I ate somewhere in a restaurant was probably a work trip back in like January or February.
Right, and now I will say we order a lot of takeout and a lot of delivery.
We do a
So
ton.
yeah, we're supporting restaurants where we can, but we are not eating inside, and that is hurting restaurants.
I have to say, also driving in, I saw more restaurants trying to build like outside facilities, and I guess with heaters. But as it gets colder, that's just not going to work so well.
It's not, and at a certain point you get an outdoor enclosure that ends up becoming an indoor space.
Exactly. We're going to catch up with some of the well-known New York City chefs. We're going to bring them in and check back with them because this is just another round of what's already been a difficult situation for them. And you do wonder, how do they survive? How do all of them survive? All right, you're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We are close to session lows. The Dow, the S&P, NASDAQ both declining. NASDAQ pushing higher. NASDAQ at a record. Stocks are falling as coronavirus infections sweep across America, triggering fears of more restrictions. The pound pared losses as the UK agreed on further talks with the European Commission to address the impasse over a trade deal. Boeing shares up by 3% as UBS recommended buying shares of the plane maker. Airbnb boosting the price range of its initial public offering. Here's where we stand. S&P down 14, a drop now of 0.4%. The Dow is down 212, lower by 0.7%. NASDAQ up 35, a gain there of 0.3%. NASDAQ 100 index up 0.4%. NASDAQ 100 index up for a 9th consecutive day. 10-year yield 0.92%. Gold up 1.2%, $18.60 the ounce. And West Texas Intermediate crude down 0.7%, $45.94 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic of Bloomberg Quick Take, and we've got a lot of virus headlines. I know you guys have been covering it. You did your 9 and noon show over on Quick Take and all over it, right?
Yeah, I mean, all over it. It doesn't matter if the story's not the virus as our first story, but it is the virus.
Right.
Even if we're just talking about global economy. We had Tom Orlick on, for example,
Love Tom.
Bloomberg economist, chief economist for Bloomberg. It's all virus.
Right. Because in terms of our economic outlook and just getting economies back on track, it is all contingent on the virus. And I do feel like over the weekend we got a better feel of, like I said to you earlier, we talked about that I do feel like there's a theme that everybody's just bracing for the next month or so, that it's going to be tough in terms of numbers. We're going to see our hospitalizations go up, our hospital systems really being taxed again as we start to see the rollout of the vaccine. But it's going to take a while.
It's going to take a while, and I think that's a key theme that we learned from talking to experts last week is even though the vaccine is here, and we talked to Emma Chandra, our colleague in the UK today, and they're going to start getting vaccines tomorrow in the UK. But the fact is very small number of people get them on the front lines.
Right.
And, there's a time period between that first shot and the second shot. So even though it's happening, it's not yet happening.
Yeah, and I think we're all realizing. I mean, you mentioned the New York Times story where you put in your, kind of, and I've heard everybody talking about, well, my number's like 200 something. Like,
yeah, 267.8 million is where I am. But who's counting?
But it's going to be a while. And I mean, it's interesting because I do think in order for this to work, you need to get as many people as possible to create that herd immunity, right? And that's how you start to bring down the virus numbers and kind of get it out of society in general.
We're also seeing some global tracking numbers that are continuing to be concerning. And I'm afraid, Carol, that we have sort of virus fatigue here, COVID fatigue, because the numbers that we see each and every day are awful, but they don't feel as awful as they did 6 months ago.
It does feel different in New York City, and I was trying to get my head around it because I don't think, and I keep saying this, you don't hear the sirens back and forth, but you do know the numbers. People are getting nervous. We're talking about the rollback in terms of indoor dining and things like that. And certainly when I talk to relatives around the country, I have a niece who's a doctor out in Utah, it's rough.
Yeah.
It is rough across the country. And so we know that it's really difficult. And, you and I have talked about borders, especially in this New York metro area, that it doesn't take much for one state, whether it's New Jersey, whether it's Connecticut, and then the numbers start to tick higher in New York. But I do feel like people in New York, people are wearing masks. People aren't going out and doing things.
Yeah, they look, we lived through this in March and April, and I think that we'll never forget that. But at the same time, we saw people travel for Thanksgiving. We're starting to see those case numbers rise as a result of that. I do wonder what it means for Christmas and the Christmas holiday, December holidays, to what extent we'll see people traveling then. And, Dr. Fauci and other medical experts are warning us not to do that.
Right.
But we didn't pay attention for Thanksgiving.
No, and I am waiting to see the pictures of the airports, right, as people start to travel home. You sent me, and I just want to bring it out to our audience, from New York Magazine, and it is a list of restaurants, 500 in all, that have gone down already. This is restaurants that are already closed because of the pandemic. And it's all around, pick your neighborhood in New York City. and it's just unbelievable.
It is, and New York Mag did this in chronological order. So it starts with the oldest establishments and into the newest establishments. So you have establishments that started in 2020 that closed this year because of the pandemic.
Copacabana.
Yeah.
1940.
Yeah, and even Lord & Taylor's the first one on this list.
Yeah.
1826. Paris Cafe, 1873. The list goes on, 498 more of those.
Right, and things that you would have thought would have been, would have figured, would be able to make it through. And this is something that has been very revealing to me in talking with Danielle Ballou and some others of just how difficult, like we've all seen the statistics of the amount of restaurants that start in any given year and those that fail. We know it's a tough industry. We've had John Tapper of Bar and Rescue, talk to us about the industry a lot. But it's just staggering that even some of these well-established restaurants that have been around for a long time just cannot make it through.
And the thing is, Carol, the list is not just restaurants. They include gyms on there that have closed and historic gyms like New York Health and Racquet Club.
Just looking at that
different locations.
1973.
Yeah. And it reminds me of I know people don't want to hear that about buying shoes for my son over the weekend, but we did go to a small business in our neighborhood.
Right.
And the woman who runs the store told us that, she was closed for 4 months. This is a local shoe store in our neighborhood in Brooklyn. She was closed for 4 months, and she's now moving locations because she's consolidating her toy store and the kids' shoe store.
All into one.
All into one because of the pandemic. She talked about relief that she had gotten or lack thereof. And it's been a really, really tough year for her.
Yeah, I wonder what this is going to mean ultimately. And I do wonder, if I look at the macro level in terms of what it means ultimately for our economy. I mean, I see it as I just kind of, drive through the streets of New York. How many stores have been boarded up? How many institutions have been shut down? And then I also, I don't know. I don't know what this means and how do we bounce back? And what does it mean for all these people that they need to figure out or something needs to be created for them to make a living, right?
Yeah,
to support themselves and their families.
And I think what this year has shown us is these businesses will not be able to bounce back without the help of the government.
Right, which is kind of where we started.
That's where we started, yeah.
Yeah, and I do wonder if we're going to move the needle. And the other thing that I'm getting a little bit more worried about, because we know that the Democrats wanted a much bigger stimulus package, a second round of stimulus, and there's been a lot of pushback. But even if we get just under $1 trillion, is it going to be enough? Which sounds terrible.
No, it's not even close to enough.
Yeah. Sorry, folks, to be so depressing on this Monday, but it's kind of where we are. And I mean, to see that list is pretty remarkable. And that's one city that's seeing that impact.
Yeah, and as Tom Orlik told us on Quick Take, it's been a dark year, and this will be a dark end to the year. So hopefully a brighter spot in 2021.
Yep, fingers crossed, and let's hopefully we'll get a big enough stimulus package ultimately. You're listening to Bloomberg Business Week. Carol Master along.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And we're going to go through some of the day's virus headlines in just a moment. We're going to do this with a great voice, Michelle Cortez at Bloomberg News.
Yeah, I'm excited.
Yeah, she's pretty cool.
She spoke to Dr. Fauci last week, I saw.
She did for the Bloomberg 50, so we'll ask her about that as well. All right, first up, let's get back to your top business stories. Once again, here is Charlie Pellet.
Hi, thank you very much. Here's what's going on. Day traders roiled by outages at Interactive Brokers and Robinhood. Ordinary investors effectively locked out of their brokerage accounts today as the top online trading program, Interactive Brokers, crippled by technical trouble. Shares down now by 2.8%. That news coinciding with a brief and apparently unrelated outage at Robinhood Markets, the one-click trading app whose popularity has surged during the pandemic. Stocks are falling as coronavirus infections sweep across states, triggering fears of more restrictions. The pound paring losses as the UK agrees on further talks with the European Commission to address the impasse over a trade deal. The S&P 500 index down 12 off session lows. That is a drop, though, of 0.3%. The Dow down 189, down 0.6%. NASDAQ up 40. That is a record, up by 0.3%. 10-year up 12.30 seconds. 10-year yield 0.92%. Gold up 1.1%, up $21 the ounce at $18.59. And West Texas Intermediate crude down 1.2%, lower by 56 cents the barrel at $45.70. Some of the other stories that we're following for you. Coronavirus. The UK is set to become the first Western country to vaccinate its citizens, a turning point in the battle to halt a pathogen that has killed more than 1.5 million people. Britons are expected to begin rolling up their sleeves tomorrow with about 50 hospitals initially taking part, delivering the shot from Pfizer and BioNTech. Shares of Pfizer today, they are trading up 1.8%. As for BioNTech, up now by just about 4.6%. The other key player in all of this, Moderna, up now by 6.8%. So what is the situation like for a rollout of vaccines in the United States? Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
It'll be complicated because it's being done through the states, and we know the states have very different public health systems, different capabilities, and there will be a lot of variation, and we'll see some things that work and probably some things that don't work that well. But over time, as more vaccine becomes available, more people will get vaccinated. If we do it well, the pandemic will end sooner. And
coming up in just a moment, we will have more on this story. The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Palantir Technologies won a deal with the FDA to help power drug reviews and inspections, further expanding the company's government business as it hustles to hit a raised revenue target for 2020. Shares up now by 16.2%. Again, recapping, equities trading mixed. S&P lower by 12, down 0.3%. NASDAQ at a record, up 0.3%. The Dow down 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Want to get right to our guests. Let's dig into what we need to know about the virus. Bloomberg News senior medical reporter Michelle Cortez is up next. I believe she's in Minnesota on this Monday. Michelle, good to have you here with Tim and myself. There's a lot going on. I don't know. What's top of mind for you as you kick into your reporting this week?
So, Carol, just as you guys pointed out, or as Charlie was speaking about, we are going to start seeing vaccinations begin now in the UK. It was just yesterday that Pfizer and BioNTech started shipping the vaccine from the facility in Belgium across the channel over to the UK. So they are getting ready to start the massive campaign there. And yeah, it's interesting to know that the UK is first to the world in this respect.
Feels kind of weird, doesn't it? Isn't Pfizer an American company? Not that I want to get all nationalistic on everybody, but it is kind of odd, right?
Yeah, absolutely. It is. It just goes to show you that sometimes those allegiances aren't what holds up. In fact, Pfizer didn't take any money from the U.S. government, from Operation Warp Speed, in order to get their part of the vaccine done. BioNTech, who they're working with, is a German company. They actually did take some early funding from Germany, but in the end, it was the UK that approved it. They had the doses on hand, so they're going to go first.
Why did they get it sooner? Why did they approve it sooner? What does that say about the way that we approve medicine and approve vaccines here?
So the UK did not do the thorough investigation of the vaccine the way that the US and European regulators are going to do. Literally, FDA staff members are checking the math, basically, of Pfizer and BioNTech. And the UK is pretty much saying, we'll look over it, but we think they're pretty good companies and we're going to trust their numbers. Of course, there's many examples in the world of where things have gone wrong because of something like that, right? Like, my understanding is one of the shuttles blew up because they didn't.
Yeah. Well,
exactly. So you need to have somebody catching that on the one hand. On the other hand, if it was really tragic, probably would have seen that in the clinical trials, so they're gambling.
But we're not talking months or weeks here. We're talking just days sooner. So it's not like it's not like we're losing in the U.S. that much time by doing this extra work.
Yeah, no, absolutely, you're right. We're not losing time. And from the beginning, the U.S. perspective has been we want to do it once and we want to do it right.
Right.
And of course, we did run into some trouble with that, right? Like the very early testing, we rolled out from the CDC. It didn't work really well, and so we just stopped until they could get it fixed. And there's been a lot of criticism for that, but they didn't want people to be making decisions based on results that they weren't entirely sure of. So instead, we just had none.
All right, we got to ask you about talking to Fauci. Bloomberg 50, you wrote the write-up on him. It's an amazing list, and Anthony Fauci, I think everybody would agree that was probably, everybody's like, yep, Fauci's on the list. No doubt about it. It's probably the first name. Yeah, I saw that one coming. Tell us about, I don't know, how you think about him, your conversation with him.
Well, it was a great conversation. The thing that astonishes me about Anthony Fauci is that he is so out there. He has been so accessible to millions of Americans. If you want to know what he thinks, you can just go online almost any day and listen to him saying what his take is on the state of the pandemic and the virus. The thing that's astonishing about it is that even someone like myself, who probably listens to him, most days of the week, in almost every conversation, he says something that's truly astonishing, really insightful, that helps people understand where we are with the outbreak and what we need to do in order to get to the next level.
I was surprised to find this, Michelle. Yeah. Maybe it doesn't surprise you, but my former colleague at HuffPost, Jeffrey Young, did a story last week about a day in the life of Anthony Fauci. He still goes and sees patients he does coronavirus rounds daily, it sounds like, which was really, did you know? I mean, I didn't know that he did that right now. How does he find the time to do that? But he's still out there interacting with patients.
Yeah, he absolutely is. But that is exactly my point. The Jeff, who used to be with Bloomberg, actually on the Bloomberg Health team, he did that. His story ran the same day the Bloomberg 50 ran, entirely different approach, and yet it's something that people can read and learn something new about Fauci from that exact thing. Like, I mean, how many people get up at 5:30 in the morning? I think actually the thing that surprised me about what Jeff wrote is that he hadn't built in Fauci's running. I mean, Fauci's a runner, and he has until just a couple of months ago ran several miles every single day. I think he's backed off on that a little bit. But,
Michelle, we got to run, and I love the picture because he's got sneaks on in the picture, so maybe that's an indication. Michelle Cortez, you're the best. Bloomberg News senior medical reporter joining us. Let's get to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol. As COVID-19 cases and hospitalizations surge across the country, White House health officials are urging Americans to refrain from traveling for the upcoming holiday season. Surgeon General Dr. Jerome Adams tells ABC's Good Morning America, if cases do not come down soon, hospitals in some areas might not be able to treat all COVID patients.
This surge is different than earlier surges because it's not about PPE, it's not about testing, it's really about healthcare capacity. And certain places are just being overwhelmed.
Hospital bed availability in parts of California is now down to below 15%, forcing officials there to impose new stay-at-home restrictions. We'll look for a vote to come this week on a one-week stopgap measure to fund the government past this Friday's deadline.
Lawmakers say they need more time to complete work on an omnibus package and a coronavirus relief bill, which congressional leaders would like to tie together. Sources tell Bloomberg the House will likely vote on a continuing resolution this week to push the funding deadline to December 18th, and that it might take until the weekend to strike a deal on the massive omnibus legislation. Potential sticking points include border wall funding, environmental policy riders, and any measure involving policing and racial disparities. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
Nancy Lyons, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic of Bloomberg Quick Take. I wonder if this story, which is, I believe, among our most read, yes, on the Bloomberg terminal, it was maybe in the works, but it just got, expedited because of the pandemic.
This idea that Goldman is plotting a Florida base for asset management.
Yeah, I just wonder. Anyway,
like that. Well, yeah, because the whole theme of the pandemic when it comes to businesses making decisions has been the acceleration of trends.
Right.
And I think that's been true for people too. If we even talked last week about real estate and people moving to the suburbs, these are people who we think would have probably moved there anyway.
Absolutely.
But over the next 3 to 5 years. So what do you make of this idea that Goldman is thinking about it moving its asset management to Florida?
Right.
And it's a blow to New York City.
It's a blow to New York City, and apparently executives have been scouting office locations in South Florida. Listen, it's just like we've seen a bunch of the hedge fund guys move out of Connecticut, right? They've been going down south, right? We have no income tax, if I'm correct, right? In Florida. So you already had, if you've ever been down to Palm Beach, I just think about some things I've done for work, and you're on a plane, and if you're going to Palm Beach, it's like a ton of business folks and a lot of financial and investment folks that are down there. There's a hub already. That's where they go. So it doesn't surprise me that makes sense to, for a Goldman Sachs to go there.
Because that's where their clients and potential clients are spending time. But I also wonder too, and I saw somebody talking about this on Twitter, to what extent this type of thing could be negotiations for real estate with,
you know,
I don't know.
Totally.
I mean, like, think about it, right?
Right.
Going public with this, or not necessarily going public, but it does leak to one of our reporters. And if they're shopping for real estate in New York City,
totally.
Does the price go down?
There's a conversation I had with someone in real estate after I think you had left me, but I do think that we're going to have one later on, that there is going to be an excess here, and so if you think about it, if you're looking for space, you're in the negotiating seat right now.
You absolutely are. It's a buyer's market, or a leaser's market, I guess.
Yeah, right. Totally. And what's interesting is we've actually a real estate person who's all about tenants, so we're going to talk about that a little bit later on.
All right, let's do it.
Let's do it. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks mixed, we're off session lows. NASDAQ 100 index up for a 9th straight day, longest winning streak in almost a year. Stocks, however, falling as coronavirus infections sweep across states, triggering fears of more restrictions. The S&P down 0.3% now, lower by 10 points. The Dow Jones Industrial Average down 180 points. That is a drop of 0.6%. NASDAQ is up 48, higher by 0.4%, bringing its year-to-date gain for NASDAQ to 39.5%. 10 years up 12.30 seconds, 10-year yield 0.92%. Gold up $21 the ounce, up 1.2%, 18.60 on gold. And West Texas Intermediate crude down 1.2%, 45.70 for a barrel of West Texas Intermediate crude. Interactive Brokers Group shares sinking after saying it was experienced, quote, a significant failure across multiple parts of its data storage system. Looking at shares of IBKR, they are down now by 2.5%. Recapping stocks trading mixed, S&P down 10, a drop of 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we've talked about this on our broadcast. We've definitely covered it in Business Week about how the federal prohibition on weed is handicapping the young industry, which is expected to, by some, to be something like a $53 billion industry, at least as measured by sales by 2025. We're talking about cannabis.
Yeah, should I make a joke about green or something, or it's high? I don't know. Like, I feel like there are a lot of puns here, Carol.
Yes, there's lots of them. Let's get into a story by Bloomberg News consumer reporter Tiffany Carey. She reports for Bloomberg Business Week on the shortest road to legal weed may not just run through the state of Georgia, or may just run through the state of Georgia, excuse me. Tiffany's on the phone in New York City. She joins us along with Bloomberg Business Week editor Joel Weber with us on the access line from Brooklyn. Cannabis, we keep waiting for it to kind of fully take off, but we've got to get kind of a federal okay with it, Joel.
Yeah, and what we're really seeing is this state by state enthusiasm that it starts with a state basically legalizing medical marijuana, and then within 10 years they're probably starting to consider legalizing recreational marijuana. But you're right, there remains that federal hurdle. The implications for that
sticking point.
Yeah, exactly. Just the puns just keep on rolling. You end up with the banking sector sort of having being one of the kind of the pinch points, so that these end up being cash businesses because they don't have any sort of bigger banking abilities. But what really is happening in the background here is, if you look at Georgia and the way the Senate and Congress sort of conversations could go, we could see some pretty significant things happening depending on how Georgia goes, and that's sort of what we get to in Tiffany's story. So, Tiffany, why are all eyes on Georgia right now?
Sure. It's been a big year for cannabis already. Just having the House of Representatives vote to legalize it is a really big deal. And in Georgia, the vote there is really going to determine what the Senate does. And as of now, it doesn't matter that all these Democrats in the House has the enthusiasm to do this, because we've got Mitch McConnell as the Senate Majority Leader. So if Georgia elects 2 Democrats instead of 2 Republicans, it's going to flip the Senate. That means McConnell won't really be a roadblock for the industry anymore. So it's given people a lot of optimism that maybe this most aggressive of all the legislation so far, the MORE Act, might actually go through this year.
And that would be something. Because I think a lot of people don't realize is what Joel was getting at, the financial hurdles that these or limitations that marijuana companies have. Tiffany, if you could just talk a little bit about this idea that Joel brought up, that these companies often have to deal in cash because banks are chartered federally, so they can't touch the stuff.
That's right. It's just crazy if you can imagine going to pay your tax bill when you're making hundreds of millions of dollars and you somehow have to do that all in cash. I mean, no one really wants that situation.
That's a lot under a mattress, I'm just going to say.
It is. Or in really small regional banks that agree to do this, but don't have that much else going on. It's a lot for them. So, the other thing is the industry has been so focused on profits. They really say they're operating with one hand tied behind their back because of the tax burden on them. They face up to like a 50% tax burden, much more than other companies. So if that goes away, a lot of these companies will become more profitable. And they can also access the capital markets. So think about, a company in a liquidity pinch that can't issue bonds or take out loans. They're sort of stuck consolidating and doing deals now. But if the banking changes, that's going to open up a lot for this industry in terms of flexibility, being able to grow, profitability.
So obviously, I think the industry is hoping that the state of Georgia goes Democrat because we basically have a sense from Republicans that they won't take this up on otherwise. But I'm wondering, if that's the sort of the worst case scenario for the industry, what do we know about President Biden and sort of what he might attempt to do for the industry?
Well, it's interesting. Things aren't actually that clear cut because there are a couple of other pieces of legislation out there. The one that was approved was the MORE Act, but there's also the States Act, which would sort of keep things status quo. And a lot of folks have said, look, that might actually be better for some of these companies that have built up these really strong presences in certain states because it doesn't open them up to more competition from the outside. So, there's some hope that might be how this goes, or that Biden might also just sign an executive order, which is something that has been done in the past with the Cole memo, and that might just take care of some of the criminal justice issues that have been an issue. And maybe there'll also just be banking reform, too. The industry could have the ability to bank through the Safe Banking Act, but sort of keep the status quo in other regards.
Well, and I do wonder if this happens and they do get the go-ahead, do the floodgates just open up? Because I feel like this is the one thing, in a federal approval, basically, federal approval of the industry, this is what we've all been waiting for, right? Because as you said, it's state by state. We've had a lot of conversations with cannabis CEOs. They've been on the Bloomberg 50 lists. They've been recognized in the magazine. I feel like this is what it's all about, Tiffany.
Well, yeah, and then there's an interesting question of what happens to all the Canadian companies where really there's been most of the investor enthusiasm. There was always this hope by starting the business in Canada that when the U.S. opens up the floodgates, as you put it, are open, the folks have said, look, there's going to be some sort of ring fencing around the U.S. industry. It's not all going to be as simple as that.
I do wonder when it comes to widespread legalization, what the states are telling us about popular opinion versus what the Senate is feeling and what Republicans are saying. It does seem like since Colorado was, among the first states to do this at this point, I think 8 years ago, Carol.
Which is amazing.
It is. It's just that the federal government hasn't moved in lockstep with states because we're at a point now where the legalization and decriminalization is in fact in the majority of U.S. states. Right. And it seems like at this point the federal government is just behind, Tiffany.
Yeah, and what's interesting is in November's elections, you had South Dakota and Montana, these more typically conservative states, voting in favor of this, really showing it has become a more bipartisan issue. And now it's a matter of what do those Republicans do in Washington? They obviously now have a reason to care more about the constituents. I think that's going to further the conversation in D.C.
And one other thing that you made me think of there, Tiffany, is just through a sort of an investment standpoint, like there is sort of exposure that investors can get to things like marijuana through, especially through things like ETFs. There's MJ, which is one of the best tickers probably of all time. But we've also noticed that there's even different structures that allow investors, if you're particularly bullish on where the U.S. might go here, like that's a whole other conversation that I know Bloomberg Intelligence has been having too.
Yeah, exactly. And it's something to think about. I was just looking up at MJ. It is actually down about 9% so far this year. All right, Joel, thank you so much. Joel Weber, along with Tiffany Carey at Bloomberg News. And for those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 1061 in Boston, Bay State Business is coming up next. You can also read Tiffany's story on the Bloomberg and at Bloomberg.com. You're listening to Bloomberg Radio.
Bloomberg World Headquarters. I'm Charlie Pellet. We move into the final hour of trading on this Monday, December 7th. It is a mixed Monday. The Dow, the S&P lower, NASDAQ higher, trading at a record. Stocks are falling as coronavirus infections sweep across America, triggering fears of more restrictions. The pound has pared losses as the UK agrees to further talks with the European Commission to address the impasse over a trade deal. S&P pulling back from a record led by energy and financial companies. NASDAQ is at a record, up another 0.4%, bringing its year-to-date gain now to 39.4%. So again, on the equity numbers, the Dow down 200 points, down 0.7. S&P down 13, down 0.4. NASDAQ up 42, a gain there of 0.3%. The S&P, as I mentioned, retreating. The 10-year up 12/32, 10-year yield 0.92%. Vishy Terapatur is head of U.S. fixed income research at Morgan Stanley. He was interviewed this morning on Bloomberg Television and Radio.
Our expectation at the moment is that over the course of next year, we'll see the 10-year Treasury go from where we are today to 145 by end of next year. So this will be a gradual, not a taper tantrum like a spike, but a gradual increase in the 10-year part of the curve.
And again, we do have the 10-year yielding 0.92%. Boeing and Spirit Aerosystem Holdings have been both upgraded to buy from neutral at UBS, which wrote that the plane maker and parts maker have a number of positive catalysts ahead given recent progress on a COVID-19 vaccine. Boeing shares, they are up now by 2.7%. As for Spirit Aerosystems, its shares up lower. Spirit trading lower by 0.7%. So again, it is a mixed day on Wall Street here with the Dow Jones Industrial Average and the S&P 500 index both declining. The NASDAQ 100 index up again, 9 winning days in a row. NASDAQ 100 index up by 0.4%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
You are listening to Bloomberg Business Week on this Monday. Carol Masser along with Tim Stenovic of Bloomberg Quick Take. And one of the top ideas of this story, I feel like it's something we've talked about a lot during the pandemic, Tim, is this need for collaboration. And we've seen it with the virus, right? The world really coming together, not with the virus specifically, but to create a vaccine for the virus.
Not just to create a vaccine, but to get it from one place to another. You know, we spoke to Michelle last hour, Michelle Cortez, our senior healthcare reporter, and she struck me with one thing she said, that the vaccine went to the UK in the Channel, right? The Channel Tunnel by train from mainland Europe.
Which is kind of interesting, right?
That's
Think
cool.
about logistics.
Yeah,
in terms of,
and the way that things get from one place to another in Europe, too.
right, which is something, exactly. It's a huge, when you think about transportation between that part of the world. I want to get into a column written by Bloomberg Economy editorial director Andy Brown. It is thinking about collaboration, this whole idea of working together. And Andy writes about this collective spirit in his latest column. He joins us on the phone in New Hampshire. So, Andy, good to have you here with Tim and myself. Tell us a little bit about this column and this whole idea. I love this idea of collective spirit and when we really all come together, like what we can get done.
Yeah, well, you know, it really doesn't seem right to be too optimistic at a time when, as we just heard,
oh man, come on, Andy.
racing across the United States, you know, and the global economy is in such a precarious position. Nevertheless, we really ought to be celebrating, I think, the development of this revolutionary, mRNA vaccine, which is probably one of the greatest, if not the greatest, scientific breakthroughs of the last several decades. I'm talking about the vaccine developed by Moderna and Pfizer-BioNTech, you know, which, according to the tests that these companies have conducted themselves, have proved to be 95% successful, in preventing infection, and are going to have a decisive role to play in ending what has been, the greatest challenge to human health and the global economy, since World War II. And as you say, it is the result of this cross-border collaboration involving a lot of immigrants, and particularly involving women who really have had a critical role to play in developing so much of this technology along the way.
It's pretty amazing.
It is, and
Great.
it's just fascinating, Andy, because it also comes at a time when a lot of countries have been looking inward for the past few years, and not necessarily in a good way. If we think about, well, it depends, I guess it depends on your opinion, but if we think about the way that President Trump has severed ties with international institutions and this idea of America first, and we have the Brexit movement happening in the UK, separating from the European Union. I wonder what it means for life after the vaccine, if there's sort of this return to, world liberalism with a small L, and the idea of countries working together in harmony.
Yeah, look, and I think it even goes beyond that. I mean, we've become sort of cynical about the ability of science and technology and research to resolve some of the big problems of humanity. I mean, we've watched the development of these foundational technologies, artificial intelligence and quantum computing and so on, but, it hasn't fixed our economic problems. Productivity growth is still sluggish. We haven't had these dramatic breakthroughs in human health and longevity. And yet, this RNA technology that's developed this vaccine holds out the promise that these technologies are really going to come through for us and could resolve not just questions of medicine, but also problems in other areas, most notably in climate change.
Well, exactly. And I think about, listen, I'm going to go back to Bloomberg New Economy Forum this year, Andy, that was just a few weeks ago, with these pillars that you guys identified, you and your team, and then had conversations about climate, about healthcare. Like, you do wonder if we can look at these problems as a whole, especially when you've got governments around the globe, putting so much money to prop up their economies. Can we do it in a more sustainable, green way? Can we do it in a way that creates better health for everyone, right? Can we think bigger and do better?
Exactly. I mean, I think it often seems like, we spend so much time dwelling on the problems associated with these technologies, and we haven't perhaps focused enough on the promise that they hold out. And some of this promise is actually delivering now, or could be delivering quite soon. I mean, you think about nuclear fusion. Just last week, the Chinese fired up their nuclear fusion reactor, which promises unlimited clean energy. I mean, it used to be science fiction, and now looks like it could seriously be a reality. Or you look at driverless cars. People were actually quite pessimistic about the idea of having a fully, autonomous car. But actually, Waymo, is about to launch in Phoenix, Arizona, a fully, driverless car service around town. So it is happening, and this is, on the one hand, is this odd thing where we started, I mean, we're seeing all this tragedy, and yet out of this tragedy comes hope.
Andy, would you get in the car without a driver?
I would, and I'd also take the Pfizer jab if I could take it right this second.
Well, you might get it before us.
Yeah, good stuff. Andy, thank you so much. Always appreciate it. Andy Brown, he is our editorial director at Bloomberg New Economy. Check him out on the Bloomberg at Bloomberg.com, and also on Twitter at New Econ Forum. Listen, I think about this. I've been having tons of conversations with individuals. The president of the Rockefeller Foundation, this is something he's looking at. And this whole idea of the money that we're committing to a lot of our problems and to really prop up the economy, can't we do it in a smarter way?
Yeah, and I think we're going to learn a lot from the vaccine that's beyond just a vaccine for COVID-19. The mRNA technology, although it hasn't been used in humans before, it has been worked on for a decade. And what are the other developments that will come from this research that's been happening around the world?
Right. What if we took like some of the research, right, that's going on and created a global effort, put money behind it? Like, you think about what you could do with it, what you could solve.
I like the Monday optimism.
I needed it because I came in here pretty downtrodden, that's for sure. All right, you're listening to Bloomberg Business Week. Coming up, we've got the chart of the day in just a few minutes, but coming up, we're going to get an update on what President Trump is doing in terms of raising money, his PAC. We'll get into that in just a moment. Let's get back to World and National News. For that, it's once again Nancy Lyons in D.C. D.C. Hey, Nance.
Hey, Carol. President Trump's orbit continues to be impacted by the coronavirus, with his lawyer, Rudy Giuliani, being the latest insider to test positive. Trump today said he's in a Washington, D.C. hospital.
Rudy's doing well. I just spoke to him. He's doing very well. No temperature, and he actually called me early this morning. It was the first call I got. Now he's doing very well.
Giuliani's positive test has forced the Arizona state legislature to close for a week. Giuliani visited with about a dozen lawmakers last week to persuade them to reverse Trump's election defeat. Well, a federal judge in Georgia has dismissed another election fraud lawsuit. Judge Timothy Batten dismissed the suit after an hour-long hearing. He cited moot arguments, lawsuit timing, and arguments filed in the wrong court. Meanwhile, Georgia's Secretary of State Brad Raffensperger has recertified election results today, with Joe Biden again the winner in that state.
We have now counted legally cast ballots 3 times, and the results remain unchanged.
President Trump and his Republican allies continue to spread misinformation, saying that the election was stolen. Some say it's an effort by the GOP to rally their base ahead of a special general runoff for both of Georgia's U.S. Senate seats, which is going to be held January 5th. Breakdancing has been confirmed as an official Olympic sport. The International Olympic Committee is trying to appeal to a younger audience and has also added skateboarding, sport climbing, and surfing. For the 2024 Paris Games, the IOC also took away some events, with the slate of 329 medal events now 10 fewer than in Tokyo. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. I'm saying it so fast because do you think breakdancing is an Olympic sport?
Yeah, sure.
No, it isn't.
Why not?
I think it is.
What is the one that they just added that is definitely not a sport?
Curling? No, curling is.
Yeah, curling's a sport.
I don't know.
I don't even remember.
I don't know. I have to say, though, I'm a gymnast, or was a gymnast like years ago. The rhythmic gymnastics, I've always been like, is it really a sport, or is it just you're kind of twirling?
You're the gymnast.
I was a real gymnast, though. I wasn't twirling.
Okay, so now I know where you fall.
What's the other one you're thinking about?
I don't even remember.
Okay.
It's one of the new ones.
Anyway, breakdancing. The world is changing around us.
I love it.
You do love it?
Yeah, I love it.
All right. Okay, cool. The judges, though, like, that's really subjective.
Yeah, I know it is. Same with gymnastics, though, right?
No, if you stick a landing, like, there's certain things, like,
Figure skating?
I think that belongs.
No, but isn't it subjective, too?
Yeah, I guess it is. Okay, we're going to talk about one story that just kind of was an alert on the Bloomberg for all of us. And this is something we talk about. Real estate a lot. Manhattan luxury home buyers, they're coming back. Thank you, discounting.
Yeah, New York
It's
City,
for sale.
Not dead yet, right?
Listen, and you and I have been like, all right, come on, everybody. Like, even the doomsday scenarios about what's going to happen to major cities, you and I both agree that they're not going away.
No, they're not going away. And now we got some numbers to prove it.
Yeah.
Okay, so there were 227 contracts for homes priced at $4 million or more from September 1st to December 6th. That's according to a report Monday by the brokerage Olshan Realty. A year ago, there were 219.
Sounds like it's pretty much back to normal and above it.
Deep discounts,
Yep.
low interest rates. Not that these people actually take out mortgages, but, low interest rates can't hurt.
Right.
And then also the stock market doing really well over the last few months.
That's a big part of
Yeah.
it. Their wealth has increased. And so they're saying, okay, I can do this. And according to the president of the luxury brokerage who put out this report, they did say many of the buyers are New Yorkers who obviously believe in the city's eventual recovery. I mean, listen, if you want property right now in New York, it's a great time to buy it.
Buyer's market.
Buyer's market, exactly.
$4 million and above.
Yeah, it's a certain kind of buyer. The caveat does exist. All right, you're listening to Bloomberg Business Week right here on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Mixed Monday stocks off session lows, NASDAQ at a record. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks trading mixed today with the Dow currently down 189 points. S&P's dropped 13, but NASDAQ is higher by 44. The U.S. 10 yield at 0.92%. Gold trading higher by 19, and transports fall 57 points. Among the main 11 S&P sectors, only tech, telecom, and utilities were in the green. Energy and real estate led to the downside. And leaders to the upside in the Dow, Boeing and Apple. Note that Boeing's price target was raised to 300 at UBS. Intel and Dow Inc. led to the downside. And note that Intel dropped on a report that Apple plans high-end Mac chips by next spring. In other news, Palantir rose 18% on a report of an FDA contract. And wrapping things up, homebuilder Toll Brothers reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill, and to hear live breaking news over your Bloomberg Type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic of Bloomberg Quick Take. Catch him at 9 and noon on Bloomberg Quick Take. Did you talk politics today?
Oh, we talk politics. I mean, everything is politics now, right?
Every industry is political.
Carol, I'm just going to reveal a little too much, but on Saturday night,
It's just you and me.
I just put on C-SPAN and watched Trump, and my wife was just about to kill me. She's like, "What? It's Saturday night. Why are you?" I'm like, "I have to watch this for work."
Arlo needs a nap.
I know. He was asleep, fortunately.
All right, so let's talk politics. I don't know if you guys have been tracking it. I know Tim and I have. Really curious about the money President Trump has been raising in his PAC, his Political Action Committee, what the money is for, how it's being used. So let's get a little bit more about this. Bloomberg News White House reporter Mario Parker is with us on the phone in Washington, D.C. Mario, so glad to have you here with us. We were talking about this on our morning call. So what is President Trump up to when in terms of his PAC, and tell us a little bit about it, what we know so far?
We're not quite sure what he's up to necessarily.
Fair enough.
We do know that he's raised money at a furious clip. We know that initially when he was making these solicitations to his donors and supporters, it was under the subject of his post-election fight. At the time, 60% of the donations were going to the RNC. Since then, we're going to this new PAC that he has. Since then, that number is up to 75%. It goes to every donation that goes to his PAC, and then whatever's left over goes to the RNC.
So what are the rules around this? I mean, let's say he does end up leaving office on January 20th, which I think he will, whether he wants to or not. Right. Does this money get saved for a future 2024 run? Does it pay for his rallies across the country as Joe Biden takes office? Yeah, well, that's the thought. He has pretty wide latitude with what he's able to do with this money, with this PAC. Legally, he has pretty wide latitude. The president, of course, has amused that he could very well, as you mentioned, Tim, in a nod to reality, that he could very well run again in 2024, given that he will not have a second term in the White House, a second consecutive term in the White House. And so presumably some of this money would be used to fund that. We will have the midterms coming up again as well. But largely, the president seems to be positioning himself to maintain a grip on the Republican Party. I think that's the biggest takeaway.
Yeah, right. The Republican Party watching this so closely.
Yeah, I mean, what does it tell you about President Trump's popularity and staying power that even after the election, he's able to send out these fundraising emails and raise hundreds of millions of dollars, Mario?
Sure, absolutely. So he's raising Trump and the RNC sans his PAC raised $277.5 million since the election, and that's not including this PAC. So I mean, he's in the press release, his campaign manager really asserted that Trump is still the premier attention grabber in the party. So it seems to be asserting that anybody that wants to, that he wants to be a kingmaker over the next 4 years.
Now, the Save America Leadership PAC, from what I understand and from your reporting, along with Bill Allison, is that they can use it to support, like you've said, other candidates and causes. They can finance travel, fundraising, consultants, and other political expenses. They've got a lot of leeway, right? So, and he can continue to do this after he's left office. Is that correct?
Yes, absolutely. I mean, it goes to, again, just this, what he's said that he's, you know, as recently as a couple of days ago, that he doesn't foresee ever giving what we know as a formal concession. And so, again, he'll look to loom large. This type of money will allow him to continue to fund those efforts. He'll continue to be able to intercede in congressional races, and also continue to flirt whether or not he declares that he's going to run for 2024. Right. He absolutely can flirt with that idea, given that the coffers that he's accumulated.
But I do wonder, like, if people who are donating think that they're donating to help, his legal causes right now, right, in terms of fighting the outcome.
Right, because polling has shown us that a lot of Republicans do think that the election was stolen from him, and the president is tweeting about this each and every day, that the fight is continuing.
Right, so I wonder, I mean, Mara, do people, is that what most of them think that they're donating towards? Or?
You all raise a very, very good point, because in bold letters, I get the fundraising emails and text messages myself. The subject is usually something related to preserving election integrity or his post-election fight. It's the fine print where you see where the money is actually going.
It's always the fine print.
So whether or not it's always the fine print. Exactly. So whether or not these donors are taking the time to read the fine print or assume that this money will be used for that post-election effort is anyone's guess, but it is in fine print as opposed to bold letters.
Do we know, Mary, we don't have much time left, but do you know at all if these are large donations or if they're small donations from a large number of people?
Just about 20 seconds.
We're not sure at all, but, I mean, President Trump has been, very prolific in small donor fundraising. Hence, part of his allure to the party and grip on the party.
He's been pretty incredible with it. I love politics and money. Follow the money when it comes to politics.
Read the fine print, Carol.
Totally read the fine print, if I can. Bloomberg News White House reporter Mario Parker joining us on the phone in Washington, D.C. Check him out at Mario D. Parker on Twitter. You are listening to Bloomberg Business Week. Carol Massar, Tim Stenovic, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, I'm just going to share it with everyone. We were talking about the SNL opener. Like, if you haven't seen it, just go see it. It's kind of, yeah.
Everybody called it. Like, this is going to be. You saw what happened last week. You open up Twitter. You know that's going to be on SNL.
Totally.
That's all I'm going to say.
That's all we're going to say. And then we are going to say that coming up next is the chart of the day with Dave Wilson. So we'll get to that in just a moment. Let's get back to Charlie Pellet.
All right. Also coming up, of course, the song of the day with Dave Wilson. Here's what's going on. We've got 28 minutes to go ahead of the closing bell. It is a mixed Monday right now. The Dow, the S&P off session lows. A down day, though. NASDAQ pushing higher up another 50 points, up 0.4%, bringing the year-to-date gain for the NASDAQ Composite Index now to 39.5%. NASDAQ 100 Index up 9 in a row, up another 0.5% today. Bottom line, though, stocks are falling as coronavirus infections sweep across America, triggering fears of more restrictions. S&P down 8, a drop now of 0.2%. 10-year up 10/30 seconds, 10-year yield 0.93%, and gold up 1.2%, 18.61 the ounce. West Texas Intermediate crude down 1.2%, 45.70 a barrel on West Texas Intermediate crude. The United Kingdom set to become the first Western country to vaccinate its citizens tomorrow, a turning point in the battle to halt a pathogen that has killed more than 1.5 million people. Britons are expected to begin rolling up their sleeves, with about 50 hospitals initially taking part, delivering the shot from Pfizer and BioNTech. So what is the situation like for the rollout in the United States? Dr. Joshua Sharfstein is Vice Dean at the Johns Hopkins Bloomberg School of Public Health.
Well, I think the big picture is it is fantastic to get a safe and effective vaccine against a pandemic that is killing now 2,000 or 3,000 Americans every day. And it is the path for this country out of the pandemic. But getting there is going to be challenging. We'll have the regulatory review starting this week, and then the vaccines will start. But it's going to get more and more complicated as the goal is to reach the highest risk people as soon as possible. And the better we do that, the quicker the pandemic will end.
And among some of the vaccine names that we track, they are higher today. Pfizer, for example, up 2.6%. Moderna up now by 5.7%. And BioNTech up now by 4.6%. Again, recapping, equities trading mixed. S&P down 8, a drop there of 0.2%. I'm Charlie Pellet. Bring on the song of the day. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. Put it in a question?
This is great.
Who
This
is?
brings me back. Bob Dylan.
Okay, good.
Yeah, who is Bob Dylan?
No Googling needed.
Oh.
Times are a-changing? Yep. Which could apply to so much this year, but it also can apply to his... Yes, indeed. Well done, Dave Wilson.
You got that story, right? That he's selling his catalog of music.
I have it printed out right in front of me, Dave.
New York Times reporting it, and I guess they're putting a number out there of $300 million. Who knows if it's accurate, but hey, you know, that's how it's going. I mean, Stevie Nicks the other day selling her catalog, at least a majority stake in it. So that's sort of where we are at this point.
And they owned their catalogs? Did they own them? They did, right?
They do. That's the difference.
Yeah.
A lot
Not like
of,
Taylor Swift and Scooter Braun.
Scooter Braun, yeah.
Exactly. I mean, that's sort of issue. It's like who owns the copyrights, and Dylan has owned his copyrights over time. You know, Bruce Springsteen's another guy. I mean, he went to court in the 70s and managed to get ultimately back his copyright. So he's in a similar position potentially down.
Didn't it happen to Billy Joel early on? Like he didn't own a bunch of his music?
I don't know that. I don't know that one. I just know that given what we've just been talking about, what a great investment these song catalogs have been.
Yeah, huge, right?
Huge.
Right. So now, dividend-paying stocks.
Yes, that was the that was
Come
the
on,
natural
Dave. We were looking for the
natural transition
segue.
to investing.
You know, dividend-paying stocks may not have the
I missed it. You got it.
catalogs, but that is the focus of the chart of the day, and it's because Lindsay Bell, who's the chief investment strategist for Ally Invest, was promoting them in a blog post on Friday. So I went back and looked at the numbers. She focused in on the S&P 500 Dividends Aristocrats Index, and that's made up of companies that have increased their payouts every year for at least 25 years running. So, I mean, there's a real commitment to raising the dividends and maintaining them over time, for sure. And so when you run the numbers, you find out that this group of stocks, the Dividend Aristocrats, has not had a good year relative to the S&P 500. In fact, as of Friday, it was trailing the index by almost 8.5 percentage points. And that's the biggest gap going all the way back to 1999. Of course, we know what was going on then. It was toward the end of the internet-driven bull market of the 90s. Who wanted dividends when you were buying eyeballs on websites or whatever, so to speak. And, you know, back then, I mean, the gap was like 27 points. So it's nothing like it is now, for sure. But at the same time, I mean, it's a second straight year, actually, where the Dividend Aristocrats have trailed the S&P 500. So it's like if you're looking for income, you know, this may be something to look at. That's her view. And if you want to know more, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Dylan is 79. I'm going to go back to that. I love you, chart. I always do, but let's go back. Dylan is 79 years old.
It was, you know, it wasn't the first concert I went to, but it was among the first.
Was
My
it
parents took me, yeah.
Ah, that's really sweet.
Dave, have you gotten to see him live?
I have.
And?
Well, you know, he's been doing this never-ending tour for years, challenging his audiences. I was not overwhelmed, let's put it that way. But
that's what my parents said, too.
Really?
Yeah, they weren't. I mean, this was like in the 90s,
for 60
too.
years now, which is saying something.
Yeah, I mean, it's still out there playing, right?
So now is he going to retire after this several $100 million
Buy an island and just like go, like do whatever you want. It's interesting though. The Right Through also talks about the Universal, right? That's getting ready for its IPO, and that they've just picked up the Taylor Swift bunch of music. And they've just added Dylan, so like it's like they're fine-tuning their portfolio in terms of evaluation or expectations maybe for one.
And I know you're going to be speaking to Lucas Shaw a little later on the show.
Yeah.
But Lucas was on Quick Take earlier. We talked about this in addition to his other stories from the last few days. And remember, the licensing of the music is such a lucrative business for these companies. So, you know, seeing Dylan or hearing Dylan music in ads, for example, I would wonder if we're going to see and hear more of that.
Right, which you hear. Right, Dave, if you think about it, there's been a lot more ads out there that are using, you know, not just canned elevator music, but real music.
Oh, sure. And Dylan has done some of that himself over time. I can't help but remember the ad that he did for Victoria's Secret.
L Brands.
That's different. I have to look that one up.
Yeah, I don't remember that one.
Do you remember that one, Dave?
Vaguely.
Vaguely.
I
That's
couldn't tell
what
you what
guys
song it
all
was.
say.
But
Vaguely,
hey,
I remember that Victoria's Secret ad.
I know you're great with the Google fingers, Carol. You'll find it.
Ouch. I
Website
deserve
is
that.
blocked.
Exactly. It is. Website is blocked. All right, Dave Wilson's going to be back a little bit later on with his stock of the day. Let's get back to world and national news. Nancy Lyons in our D.C. studio. Hi, Nancy.
Hey, Carol. The U.S. is now averaging about as many deaths per day from COVID-19 as it was back in April when the pandemic ambushed the New York area. The nation's top infectious disease expert, Dr. Anthony Fauci, says the Christmas season is likely to be worse than Thanksgiving.
Without substantial mitigation, the middle of January can be a really dark time for us.
He says it's likely we'll see a surge upon a surge. He spoke at a news briefing by New York Governor Andrew Cuomo. New York is enacting new restrictions that may mean regionalized shutdowns again if hospitals approach capacity limits. Bob Dylan's song catalog is under new ownership. We get more on that from Bloomberg's Nathan Hager.
There must be some way out of here. Universal Music Group has acquired the entire collection of more than 600 songs written by Bob Dylan. It's not saying how much it paid, but sources familiar with the terms tell Bloomberg News the catalog is worth more than $200 million. Bob Dylan is just the latest artist to cash in on the boom in music rights. Just last week, Stevie Nicks sold a majority stake in her catalog worth about $100 million. Nathan Hager, Bloomberg Radio.
Well, today marks the anniversary of the Japanese attack on Pearl Harbor.
Please bow your heads as we observe a moment of silence to honor the events that occurred at this moment 79 years ago today.
The event was co-hosted by the National Park Service and the U.S. Navy. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. This story caught my attention. Can't remember, I was reading in this morning, Dow Jones Wall Street Journal. I love the headline on it. Mount Everest is getting an altitude adjustment. Apparently, the elevation of it, they're adjusting it a little bit because it wasn't, I guess, exactly right.
Yeah, so I guess the question is it 29,017 feet or 29,028 feet? There's an 11-foot difference there.
Yeah.
And Nepal and China are disagreeing on the actual altitude.
Yeah, I guess they've been taking surveys for a long time, and they're going to make an announcement tomorrow, specifically. It is the world's tallest peak. We know that, but it's just, what, you're looking at me like...
Yeah, I mean, do you just meet in the
perplexed.
middle with a disagreement like this?
What?
Do you just meet in the middle with a disagreement like this?
Let's split the difference?
Yeah, split the difference.
Well, I wonder why it's so important. I guess it's just we all want to know, right?
What does it mean for people who've done this already?
Right. I mean,
You
did
know,
they have to
they
go...
thought, yeah,
to
they have to
records
do it
and
again.
stuff?
Sorry, you have to do it again.
It's not legitimate.
Yeah.
So China's official height, they've got a Tibetan name for Everest, which Chomolungma, am I saying it right? I'm not. Chomolungma.
Sounds good to me.
Okay, good. 29,017, right? That was a 2005 survey. Used rock height estimating where the peak lay under the snow. And Nepal has used a snow height of 20,028, so the higher elevation. For the peak it calls Sagaramatha. And that was from a 1954 survey that they did. And that's where people stand atop the snow, and the measure is standard practice in most countries. I love that, actually, those nuances. It's a little nerdy.
Yeah, it's great. But I do wonder, you know, we've talked a lot about this on Quick Take and the way that tourism has changed around the world because of the pandemic.
Mm-hmm.
And there's a big example of this when it comes to Mount Everest because people aren't climbing it. And
Right.
it was huge for the local economy.
Well, you think
Huge
about,
for
right, all the
Sherpas.
guides, right?
Yes, the
Exactly.
guides, exactly.
Well, this is, you know, you talked about, you know, the global economy initiative. Like, these are all these things that play into what's going on in kind of remote, very remote places of our world. So we're certainly watching and just trying to figure out the cost and the impact.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Fast fade into the close. 13 minutes to go ahead of the closing bell. We are very close to session lows on the S&P. Let me get right to the numbers. We'll give you the story in a moment. S&P down 16 now. That is a drop of 0.5%. The Dow is down 224 points, down 0.7%. NASDAQ holding on to a 30-point gain for NASDAQ. That is an advance now of about 0.3%. NASDAQ 100 index up 9 in a row, higher now by 0.3%. Stocks are falling as coronavirus infections sweep across America, triggering fears of more restrictions. The S&P dropping from a record led by energy and financial companies. Intel tumbling on news that Apple is planning a series of new Mac processors for introduction as early as 2021. We've got Intel down now by 4%, Apple shares up by 1%. 10-year yield 0.93%, S&P, as I mentioned, lower by 16, down 0.4. Gold up 1.3%, 18.62 the ounce, and West Texas Intermediate crude down 1.3%, 45.66 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the drive to the close. Back with us is Eric Clark, portfolio manager at Rational Dynamic Brands Fund. He and his fund, the Rational Dynamic Brands Fund, it continues to be just about all of its peers this year and over the last 5 years. Over the past 5 years, up on average 16% annually, putting his fund in the 94th percentile. That's according to Bloomberg data. Eric is back with us on the phone from San Diego, joining Tim and myself. Eric, good to have you back with us. First of all, how's Chicago? How are you guys doing in terms of dealing? I'm sorry, you're in San Diego. Forgive me. Just wrong notes.
That's okay, Carol.
Also a tough city. How are you guys doing in terms of the virus?
Okay. I mean, we're starting to shut down some of the restaurants and limit store, numbers of people in stores. So that seems like it's a national thing, even though we can eat outside with some heat lamps and stuff. But, I think we're all going to, at least we all know the playbook and we've seen the movie before, right?
Yeah.
We just have to stay safe.
Unfortunately.
Yeah, I mean, I want to dive in and just talk about some of these names on here, Eric, because you're like speaking my language when I look at what our producers have gotten for us, because this is all about travel, and that's what you have your eyes on right now. You write that you cannot wait to get Airbnb in the portfolio next week. Just today, we're learning through a new filing the company increased the price that it wants to sell shares at the higher end, which increases the valuation. Why are you so bullish on Airbnb?
Well, I think, and I hate that they keep raising it. I understand if I were them, I would do the same thing. But I think people have realized that, if you can rent a house and have more space and be in a community that you want to be in, and there's just a lot of appeal to that. And so I don't think the hotels are by any stretch dead or anything. But I just feel like this COVID has made people realize that there's some other options that might even be more compelling to protect yourself and have your family and enjoy your stay wherever you're going. So I just feel like Airbnb could be the next mega brand. I just feel like it's the right time, right place.
You're probably not alone. There's another name in this list that really gets my attention. That's Vail Resorts, ticker symbol MTN. The company owns a lot of mountains, not just Vail, but skiing during COVID. Are you optimistic?
Well, listen, the travel basket, if you will, which includes Vail, is one of those that, near term, you always have some potential kind of volatility around the names in the sector, but bigger picture, it's just the pent up demand for getting out, doing the things that we used to do, that we love to do, sports and music and restaurants and travel.
that is just going to be a bigger theme. So, I mean, I actually like some of these names pulling back. Vail in particular, I mean, listen, they're going to limit the people that are on the mountain. So it's not going to be, for the next 3 months. But I think that winter will be good. People want to get out and ski. Plus, you're in the great outdoors where it's much safer. And then we're going to roll into summertime. And, I mean, good luck trying to find vacation spots in summertime, I suspect, unless something radically changes with the virus. So I just feel like these names are just going to be, great names for the next 3 years.
And I do feel like, whether it's parks, public parks, anywhere where there's wide open spaces, right, Tim, we've seen they actually have fared much better during the pandemic. That's where people are going because there is space. They can be outside and socially distance pretty easily.
Yeah, and I think that's back to what Eric was saying about Airbnb. The idea of these long-term rentals for people to get out of their small spaces, go somewhere warm for the winter.
Exactly.
Airbnb is the place to do it.
Yeah. Hey, one thing I do want to ask you, though, Eric, so you like Airbnb, DoorDash also getting ready for their IPO. Not as interested?
Not as interested in that one. I mean, we have Grubhub available to us. We don't own it currently. It's just, I'm a foodie, so I'm a snob with food and delivery. And, most food doesn't get delivered well. So, you end up getting your food and it's soggy and, that just kind of is a poor reflection of the brand that you chose for the restaurant. So that business is just, low margins, difficult.
I get a lot of things delivered.
Love that.
I get some pretty nice stuff delivered. That's not too bad.
I always have to microwave.
Depends on the food. Depends on the menu item. Some food travels well, and I get it. But I'm not in love with that one as much. We have opportunities on the Grubhub if we chose to, or with Uber, with Uber Eats too, if we wanted to play that part of the market.
Lots of choices.
Okay, let's talk Salesforce. Carol, you talked to Stuart Butterfield last week.
We did, from Slack.
From Slack, yeah. Salesforce investors on Friday not so happy about that price that Salesforce paid for the Slack acquisition. But you say that analysts are wrong, Eric, and that the Slack acquisition will offer a multiplier effect. Give us your thinking here.
I do. I think sometimes they get a little too short-sighted and they spend too much time in their Excel spreadsheets. I just feel like Slack is a wonderful product and service and efficiency tool. And yes, Microsoft is giving it away in the bundle, and that's a problem. And I always thought, it's a great service that probably just needs to have the air cover of a bigger company. And whether that was Salesforce or someone else, I just feel like they're going to be able to thrive with a much bigger, much more aggressive sales team. There's just a lot of things you can bolt on to that once you integrate the two businesses with all the different things that Salesforce has. And, if you guys listen to Mark Benioff, I mean, he is just the ultimate showman when you listen to him on conference calls. I mean, it's hard not to get excited about this guy.
Yeah, and he knows all about, acquiring companies, right, and integrating. I mean, this is what he does. But I do wonder, Stuart seemed to say that they would be their own entity still, like in their own identity. But do you think that's not the case? In order for it to really ramp up, it's got to be integrated into the portfolio of companies that Salesforce offers or their offerings?
Well, I think it's both to begin with, right? Okay. They're gonna take the two teams and they're gonna identify how do we put this bundle together to really give that multiplier effect to companies and IT departments. But some people are going to say, well, I don't know if I want Slack. I'm competing with Microsoft and Salesforce, but now I have to make a choice of one service or not, because they're the dominant providers. I just ultimately think that this is. The valuation is what it is. Stocks are expensive, particularly in that category. And if you see the long-term vision and you have the finances with interest rates at zero to be able to get really good finance rates low to purchase a company like Slack that is the next generation of startups. And, they absolutely favor a Slack over Teams. Teams is kind of the bigger company mentality, whereas the younger companies and the startups love Slack.
All right, got to run. Eric, good catching up with you. Eric Clark, portfolio manager of the Rational Dynamic Brands Fund. Check out that fund because it's been an outperformer for the last 5 years. Counting you down to the close right here on Bloomberg. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. A recovery for the S&P 500 index in the final few minutes of trading. There you have it, sound of the closing bell at the New York Stock Exchange as we wrap up trading on this Monday, December 7th. Folks from Domino's virtually ringing that closing bell. In the end, just a 7-point drop for the S&P, down 0.2%. NASDAQ continuing to push even higher, up another 55 points, up by 0.5%. And the Dow Jones Industrial Average down 149 points for the Dow, a decline today of just about 0.5%. So stocks ending the Monday session well off session lows, but nonetheless a down day. Stocks fell as coronavirus infections spread across states, triggering fears of more restrictions. The S&P falling from a record led by energy and financial companies. Eric Clark is portfolio manager at Rational Dynamic Brands Fund. Moments ago, right here on Bloomberg Business Week, he told us he's looking ahead to the Airbnb IPO.
So I don't think the hotels are by any stretch dead or anything, but I just feel like this COVID has made people realize that there's some other options that might even be more compelling to protect yourself and have your family and enjoy your stay wherever you're going.
One of the day's big stock winners, Palantir Technologies, had won a deal with the Food and Drug Administration to help power drug reviews and inspections, further expanding the company's government business as it hustles to hit a revised revenue target for 2020. Palantir surging today by 21.3%. Apple planning a series of new Mac processors for introduction as early as 2021 that are aimed at outperforming Intel's fastest. Apple shares up today by 1.2%, but a down day for Intel. Intel tumbling by 3.4%. 10-year yield 0.93%. Gold up 1.4%, $18.64 the ounce. West Texas Intermediate crude down 1.2%, $45.70 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me. I got a few moves I know you'll like.
Shaking all over. Bloomberg Business Week. Movers and shakers.
Shaken, not stirring.
On Bloomberg Radio.
Yes, indeed. Let's take a look at the markets a little bit deeper. I'm Carol Master along with Tim Stanovic of Bloomberg Quick Take here at Bloomberg headquarters. I want to just do a little bit of a big picture. It was a funny day, and I do think it's safe to say investors are kind of waiting for more stimulus. If I look at the S&P 500, Tim, you see my computer is really slow. So let's go to major industry groups in the S&P 500. 3 of the 11 major industry groups were higher today. Communication services, top of the pack, up about 0.6%. Utilities, a little bit higher, up about 0.5%. Information technology, which are some of those big tech names, they were up about 0.25%. Everything else was lower. Bottom of the pack, once again, we saw energy down about 2.5%. The S&P 500, do you have it up?
I don't. Well, I have the S&P 500, yeah.
Yeah. So, here it is. 175 names higher, 327 lower. So we did see more of a risk-off trade today, 3 unchanged. One name, though, you brought it to our attention. We've been talking about it all day here at Bloomberg. Eastman Kodak. Nuts.
Yeah. Remember that company?
Yes. Way back when, right?
Way back when.
When the
ticker
was, I believe, EK.
Right. So now it's another big day for Eastman Kodak. The company rallied because there was this report that said there was a probe, if you remember, think back to this summer, that there was no wrongdoing regarding that government loan to the company because it had been turned into a pharmaceutical manufacturer. And there was concern that there was some impropriety. And this report in the Wall Street Journal says that the Inspector General of the agency that brokered the deal delivered no evidence that employees of the agency had any conflicts of interest in the plans, nor was there, quote, any evidence of misconduct on the part of DFC officials.
So that kind of, listen, whenever there's some controversy, right, or legal concerns or what have you, weighing on a company. Go ahead.
88%, Carol. 88%.
In terms of the
stock rally,
the bounce up. It's tremendous. Like, that is a big overhang. You're right, at its highs, up 88%. Closing still up about 60%. So it's a $12. The story of Kodak, right? If you go over the decades, go over the years and the history, it's a very different company from what it was. But when there's overhang, that's a big deal.
It's a big deal. And, it's one of those retail names that was sort of in the same bucket as Hertz over the summer, where there were big moves and the Robin Hood crew was, either making or losing a lot of money, but moving the company's stock.
Yeah, exactly. And you know what's interesting? We were just talking with Eric Clark of Dynamic Brands. I mean, there was a point when Kodak was one of the iconic American brands, could kind of do no wrong. But just a reminder of kind of the changing nature of our world in particular. All right, so Kodak was a really fun one to watch today. And anybody who was actively playing that name, right, had the potential to make an incredible amount of money today. Charlie mentioned Intel. I just want to kind of bring it up again because I do think it's interesting when we talk about changing dynamics of our world. Intel, once again, an iconic global brand, but this year has been a bit of a game changer in terms of chip production for them and kind of being, I feel like, at the forefront. And that's not me talking. I'm not the chip expert, but others, especially as you see Apple getting ready to kind of do its own thing when it comes to chips.
Yeah, I mean, look, we might not be the chip experts, but our colleagues Mark Gurman and Ian King, who reported this story early today and caused the company stock to move, saying that Apple is prepping its next Mac chips with an aim to outclass top-end PCs, essentially saying that new Mac processors that could come in early next year could outperform Intel's fastest processors. Now, the thing to keep in mind here is that even though Apple is doing this themselves and they're moving away from Intel, Apple, according to Bloomberg, only gets less than 10%, Intel only gets less than 10% of its revenue from furnishing Apple with Mac chips. The issue is how this affects how other companies are going to look at Intel. If Apple can build a better chip, is it going to accelerate a shakeup in an industry that has long been dependent on Intel's pace of innovation, as Mark and Ian write?
That's it, right? Their pace of innovation, their engineering, their expertise in being kind of one of the best places to go, if not the best place to go, right? Globally, when you needed chips for whatever you were making.
And Carol, people love this new M1 chip in the new Mac computers. They're doing a lot on their computers. The fan is not even going on. That was a huge issue for Mac laptops.
Power, right? Energy, heat,
huge.
All that stuff.
Exactly.
That is fascinating. Well, I do think this is going to be potentially a game changer, certainly at least for Apple, right? If you think about they're doing all of this in-house and you do wonder who else is going to follow. I do want to just quickly mention L Brands. That stock was your second best performer in the S&P, up more than 5%. We got the news last week that they plan to separate Bath and Body Works and Victoria's Secret next year. Listen, it's the good versus the bad retail.
Yeah, it reminds me a lot of Gap and Old Navy and, what companies have been doing for years in terms of trying to highlight the brands that are working well, the names that are working well. You and I were talking during the break. It's amazing to see the way that Bath and Body Works has been able to kind of hold on to momentum because it offers, well, we used to call them experiences, right? But the idea of going into one of these stores, getting a different scent, a lot of people love that.
And people were still buying even with the shutdown. All right, you are listening to Bloomberg Business Week. Let's get to Bloomberg Stocks columnist Dave Wilson with his stock of the day. Dave, what do you got?
I've got Chimerix, Carol. It's a drug developer that specializes in treatments for cancer and infectious diseases. The company was founded in 2000 and went public in 2013. The ticker is CMRX. Chimerix shares more than quadrupled during their first 2 years of trading. They collapsed in late 2015 after a drug designed to prevent infections in kidney patients failed in a final stage study. Chimerix said back then that it would test the medicine called brincidofovir as a treatment for smallpox. 5 years later, the company moved a step closer to gaining U.S. approval for that use. Regulators accepted Chimerix's application for brincidofovir and agreed to give it a priority review. Their timetable calls for a decision by April 7th of next year. If the drug is cleared, it would be the company's first product. Now, Chimerix's shares rose to their highest price since June 2019. They closed with a gain of about 25.5%.
Which is why it's kind of added on to now a gain of about 123% for the year, Dave. So quite a run, right?
Absolutely. But then again, we are talking about a stock that closed today at $4.54 a share. Puts it in a little bit of perspective.
It does indeed. All right, Dave Wilson, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic. You're off.
I'm off.
I know. And it's not that you have a short day because you start at like 6 in the morning, 5 in the morning, something like that.
Yeah, it's an early day, but I love it. And guess what? I'll be here tomorrow.
And we look forward to it. Catch Tim on Quick Take. That is at 9 a.m. and then again at noon. All right, you're listening to Bloomberg Business Week. Have a good evening.
Thank you, you too.
You bet. Let's get back to world and national news. For that, it's over to Ed Baxter in San Francisco. Hello there, Mr. Baxter.
Hello, Carol. How are you? I guess good. That's good. By the way, we're getting word now. Mitch McConnell says the U.S. Senate will pass 1 week stopgap funding bill. He is on the Senate floor right now, and he says that he hopes the spending bill will come to the floor very, very soon. So that would be the 1 week delay to keep the government open, basically. We'll get you more information on that. Hospital and ICU beds, a common concern being heard through much of the United States today, starting with the Surgeon General, Jerome Adams.
This surge is different than earlier surges because it's not about PPE, it's not about testing, it's really about healthcare capacity. And certain places are just being overwhelmed.
Yeah, now both New York and California states governors are expressing great alarm. California in the first day of its new stay-home order, and Governor Gavin Newsom.
Hospitalizations, we're now over 10,000 patients in our hospitals, 72% increase over the last 14 days.
Yeah, 72% in 14 days. And the South, ICU availability between 6 and 14%. Of the north of the state, about 25%. But positivity statewide in 30 days is more than tripled. In New York, Governor Andrew Cuomo.
If our hospital capacity becomes critical, we're going to close down that region. Period. We close down a red zone.
This is schools in the city have just reopened. Now, in California, the governor is also introducing a new app.
Two of California's best-known headquartered technology companies, Google and Apple, have joined together in an effort to provide for exposure notification, not contact tracing, but exposure notification.
Should be available Thursday. In San Francisco, I'm Ed Baxter.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Charlie Pellet. I do want to mention a headline because you're always so good about catching these, Charlie, but I'm going to catch it this time. Uber, the self-driving deal said to value Aurora at $10 billion. Uber sold its self-driving car division to Aurora Innovation, took a stake in the startup, and it's creating basically a larger competitor to the leader in the field. We're talking about Google, formerly Google, but now Alphabet, their Waymo. We talked about that earlier with our own Andy Brown. So the deal's going to value Aurora at $10 billion, according to those in the know. So just good to kind of get some numbers and valuations on all of this, Charlie.
All right, let's switch gears because December set to be the busiest year-end on record for IPOs in the United States. DoorDash, Airbnb ready to start trading this week in long-awaited listings. A story written by our Crystal Say, and very interesting because at the top of the hour we spoke with Eric Clark, portfolio manager of the Rational Dynamic Brands Fund. You guys asked him about Airbnb, likes it, plans to be a part of that IPO. Yeah. Not so for DoorDash, and I thought that his reasoning was kind of interesting. He basically was feeling that...
Oh, sorry. I was afraid you were going to play a little sound there. So I did. Yeah, go ahead.
No, I set it up like that. But basically what he was saying with DoorDash is that with DoorDash, you've already got Grubhub out there as a known entity. Right. And you've also got Uber Eats out there. On the other hand, Airbnb is unique.
Well, he said also a lot of food doesn't come so nice. You've got to warm it up. It doesn't travel well. I don't know. We've been pretty happy with all the takeout we've been taking in at this point. What's interesting is I just mentioned Uber and Aurora and their valuation, though. You know, we're getting more ideas about the valuations of some of these. DoorDash IPO valuation of $35 billion at the top of the range. Airbnb $42 billion at the top of the range. I mean, these are going to be massive companies out of the gate here, Charlie.
Exactly, and going to be very interesting just to see how this plays out, if at all, with the broader market, just in terms of does it help, does it hurt, or does it have no effect on sentiment?
Well, here we are, though. Pretty strong IPO market in this crazy year of 2020. Charlie, thank you so much.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pelletan, repeating a headline we brought you a couple of minutes ago. Uber Technologies is selling its self-driving car division to Aurora Innovation. It is taking a stake in the startup, creating a larger competition to the leader in the field, Alphabet's Waymo. Stocks fell as coronavirus infections swept across American states, triggering fears of more restrictions. U.S. stocks did finish well off session lows. S&P ending the day retreating from a record, down 7 points at 3691, a drop today of 0.2%. NASDAQ at a record, up another 55 points, up 0.5%. NASDAQ 100 index extending its run to 9 in a row, up another 0.5%. The Dow down 148 points, down 0.5%. 10-year up 11.30 seconds, 10-year yield 0.92%. Gold up 1.4%, 18.65 the ounce, and West Texas Intermediate crude lower today by 1.2%. WTI at 45.72 a barrel. Billionaire Bill Gross proposing to settle his feud with his Southern California neighbor and end dueling harassment complaints, saying there are more important things to focus on, like the pandemic, but the neighbor now rejecting that offer to settle. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Like you said, just share some cookies.
Exactly. Hand them across the fence, big hug, and let's move
Or
on.
maybe some fun brownies. Maybe that's what you got to do.
Exactly.
All
Wouldn't
right.
you like to be my neighbor?
Wouldn't you? All right, Charlie Pellet, thank you so much. So a lot of people are talking about this app and this story specifically about this app. The app is called OnlyFans. It's a site which our Lucas Shaw reports is a billion-dollar media giant hiding in plain sight. Let's get more from Bloomberg News Entertainment reporter Lucas Shaw. He joins us on this Monday on the phone in New York City. Lucas, good to have you here. So what exactly is OnlyFans?
OnlyFans is a 4 or 5 year old media company started by this guy Tim Stokely, who has a kind of a now somewhat long history, I would say, in online pornography and online subscription businesses. And OnlyFans stays true to that idea, where you can pay for special access, exclusive access to different photos and videos, and have a direct relationship as a fan with one of your favorite creators. The most common use case is currently among adult models, pornographers, and the like. But they're really trying to position the company as part of this new wave in media, where instead of just trying to get as big an audience as possible on Instagram, Snapchat, Twitter, Facebook, and YouTube, and so on, there's a kind of a new layer of apps where you're charging your most ardent fans for some closer intimacy. You can think of it much like a Patreon or a Substack. OnlyFans has this stigma or association more with sex work, but it wants to be a mainstream app without leaving behind this world that first got it some notoriety.
So, and it's attracting some really well-known performers. You write about Cardi B.
Yeah, so Cardi B used it over the summer to promote her new song WAP. She posted a behind-the-scenes kind of footage from her cover shoot with Elle magazine, another behind-the-scenes footage of the filming of WAP with her and Megan Thee Stallion, kind of have snakes crawling all over their bodies. And there have been a couple of other kind of rappers who have similarly used it to promote new music. I believe now the actor Michael B. Jordan is going to use it to raise some money for charity. And the big question for OnlyFans now is, can they get people like Cardi B, like Michael B. Jordan, and other celebrities to use it on a semi-regular basis and make it part of their social media portfolio?
Yeah, it's kind of interesting. I was trying to think, is it like akin to like when you go to a concert and you get an all-access pass, right? You pay a little bit extra, you get some time with the artist. You feel like you get some personal time with the artist. And I wonder if it's kind of that's what they're trying to create here, but in a virtual world.
That's what they'd like. And, you know, there are people who already do this. There are a lot of YouTubers, for example, who will charge memberships. You have to pay extra if you want early access to videos or access to extra videos. You know, maybe they post 3 videos a week, but only one of them goes up to people who don't pay, and 2 of them are only for fans. One of the main use cases on OnlyFans seems to be also kind of a direct communication. People will message with the creator, or the creator will say, you know, if you hit me up in the inbox and give me a tip, I'll send you a special video. that's something you could see people doing. And there's all levels of this. Like, obviously, huge celebrities are not going to be in the DMs talking with tons of different fans, but they can find ways to release footage that really ardent fans will pay extra for.
Right.
And smaller, medium-sized celebrities will actually engage with fans on a more regular basis, where they can kind of filter out some of the crazies on Instagram who might just DM them because they're bored.
Tim, Lucas, rather, excuse me. I was talking with Tim Stenovec earlier about your story. The two of us were talking about it. What's interesting is, as I read the story, I wrote next to one paragraph that you wrote, WOA, because you write that they've got 85 million users, upward of 1 million creators, and they're going to generate more than $2 billion in sales this year, of which it keeps about 20%. I mean, these are pretty amazing numbers, but it sounds like Tim Stokely, the guy behind it, the founder, he's really got to become legit to really take it to a whole other level. Can he turn it from, kind of adult stars to being a much more accepted venue and platform?
I would say he maybe. It's also very possible that at some point maybe he kind of brings in a seasoned media executive to help him do that. There were some people who would like to draw a comparison with Snap and TikTok and lots of new social networks. Sometimes they first gain notoriety because people use it to sext, or because even to this day, there's lots of scantily clad people on both those apps. I think the association with OnlyFans is a little bit different, and it will not be as easy a transition, because Snapchat at its core is a messaging app, and it was popular with a wide swath of people. Same thing with TikTok early. I think for this to happen with OnlyFans, they've really got to find a way to sell them, get a handful of creators to serve as sort of brand ambassadors. And I think that's what they're in the process of trying to do now. They talk about how Cardi B and Beyonce were really big for them. I actually got a note over the weekend from a fitness instructor who said that, she's an example of somebody, she's made enough money, or they've made enough money from OnlyFans this year to buy a new apartment, to move, they're getting married. So there are people who are building businesses, but it's definitely a question of getting people to change their association with it.
Right. It's kind of one of those stay tuned, it sounds like. Lucas, great stuff. Really, really cool. Thank you so much for cluing us in. Bloomberg News entertainment reporter Lucas Shaw with us on the phone in New York City. For those of you listening in New York City and San Francisco, also watching on YouTube, Bloomberg Business Week, we're going to continue. If you are listening on Bloomberg 99.1 in D.C., Sound On with Kevin Cirilli, that is coming up next. Stick around, though. We're going to talk about the future of health. This is Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, you're listening to Bloomberg Business Week on this Monday. I'm Carol Masser, live from Bloomberg headquarters in New York City. And kicking off on this Monday is the Milken Institute 2020 Future of Health Summit. The lineup is phenomenal. We're going to check in with the President and Chief Operating Officer over at Milken. We'll check in about this event and get an idea of what they're going to be talking about. We'll do that in just a moment. First up, though, back to your top business stories. Some of the news after the close. Here is Charlie Bell.
Hi, thank you very much. Here's what's going on. NASDAQ 100 index made it 9 in a row today, longest winning streak in almost a year. NASDAQ Composite Index at a record, another record, up another 55 points today, up 0.5%, extending its year-to-date gain to 39.54%. S&P, though, fell 7, did see a late session rally, but still red on the screen at the end of the day. S&P down 7, a drop there of 0.2%. The Dow fell 148 points, down 0.5%. Stocks fell as coronavirus infections swept across America, triggering fears of more restrictions. The pound pared losses as the UK agreed to further talks with the European Commission to address the impasse over a trade deal. 10-year up 12.30 seconds, 10-year yield 0.92%, gold up 1.4%, 18.65 the ounce. West Texas Intermediate crude down 1.2% at 45.70 a barrel. So a mixed Monday. What about the market outlook heading into the new year? Jason Dreo is head of America's tactical allocation at UBS Financial Services.
So I think people are definitely bullish, and we look at the landscape to say, well, what is the environment next year? A global environment of accelerating growth above trend, and that kind of quadrant of your matrix, that's historically the best environment for equities. So the fundamentals sort of justify, I think, a pretty bullish outlook.
Ryanair Holdings has a plan to thunder back from the air travel slump. It is grabbing airport space while its weakened rivals are still in retreat. CEO Michael O'Leary says the Irish discount airline will use the 210 737 MAX planes that it's getting from Boeing over the next 4 years, an average of 1 a week, to expand across Europe. Today we did see ADRs of Ryanair up by 1.1%. Among some of the other airline stocks today, American Airlines was up 4.9%. UAL, United Airlines Holdings, lower by 0.1%, little changed. Delta shares lower today by 1 cent, also little changed. Rounding out the big four, we did see shares of Southwest Airlines today advancing by 0.6%. The biennial Paris Air Show scheduled to take place in June of 2021 has been canceled because of uncertainty caused by the COVID-19 pandemic. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So getting underway today is the Milken Institute 2020 Future of Health Summit. It's aimed at confronting the most significant health challenges, and it's all about matching different stakeholders, human, financial, scientific, and educational resources specifically with innovative and impactful ideas. This year, the summit understandably focusing on the converging crises of public health, economic insecurity, and social injustice exposed once again, but this year by COVID-19. Let's get more from Richard DeTizio. He is President and Chief Operating Officer of the Milken Institute, and he joins us on the phone in Santa Monica, California. Rich, nice to have you here with us. How are you?
Well, thank you. Thanks for having me.
Yeah, tell me about, I want to get into the summit. We've got a nice chunk of time to do so, but California, you guys are obviously looking at COVID again at this summit, but you're facing once again a shutting down of the California economy.
We are. So I am one of the 33 million Californians that are now under a stay-at-home restricted order. So I think in the early spring, we were one of the first in the nation to enact the same and had seemed to bend the curve then. Recently, as you've seen, we've been joining the increased spike in cases that we're seeing across the nation, some 200,000 cases a day on average right now across the U.S. So hopefully these restrictions will be in place for 3 weeks, and with any luck, we'll be able to curb it a little bit, particularly after the post-Thanksgiving surge.
Yeah, it's all about bending the curve. I mean, listen, global cases, 67 million, more than 67. and we're talking about 2,000 a day hospitalizations in the U.S., global deaths topping 1.53 million. When you guys went into creating this summit, and I'm lucky enough to participate in Milken and do some of the panels for you. You guys are just incredible about the people you bring together globally to really tackle some of our major issues. Healthcare has always been, and wellness has always been a part of what you do at Milken. When you were putting together this summit, what were the goals? What were the missions?
Well, I think one of the things that you've noted is there's a great desire, whether it's coming from the public sector, government, academia, the nonprofit space, to have civil dialogue. I think too often we watch the news and we just get sucked into the negativity, and people are yelling so loudly at one another, you can't have a civil discourse. Yeah. So what we try to do is really bring together people who can bring their best thinking to the various issues. As you mentioned, COVID is a disease that we're trying to tackle, but has also unearthed all sorts of inequities and other issues that were in the health and in our economy too.
I'm sorry, please continue.
So we broadly focus on the interconnectedness of both health and finance broadly. So you can't have a thriving economy unless you have a healthy workforce, and you can't have medical innovation unless you understand the funding needs of the same.
Yeah, exactly. You know, it's interesting, too, and we're here increasingly, people are nervous, whether it's in the healthcare sector or even in other industries, obviously don't want to see more people get sick, don't want to see more people die from COVID, but also worried about, not having the workforce that we need to kind of keep our economy going. Give me one of the highlights, and then we'll do some more news, and then we'll come back and talk some more. But what's one of, I know you've got Anthony Fauci there, Alex Azar, the Health and Human Services Secretary. What are some of what's one highlight that you're looking forward to, or maybe has already happened today?
Well, I think this morning, Dr. Fauci warned that the Christmas season might actually be worse than the Thanksgiving, which was a little bit sobering.
Yeah.
But I think that if we look at Faster Cures, which is the unit here that focuses on medical research, has since March been tracking some 319 treatments and 237 vaccine candidates. So while we're familiar with the Pfizer and Moderna and AstraZeneca, some of the ones that are early out of the gate, there's just been an awful lot of coordination across the globe. In fact, the Shanghai professor actually published online the mapping of the genome of the virus in January, and you had the world, both through academic institutions, large pharmaceuticals, and governments, downloading and working on it immediately. So you've seen a global response unlike any before in history, and that level of cooperation is hopefully something that we could model going forward across every disease, not just this one.
I have to say, if there's one theme, and we talked about it with our Andy Brown earlier of Bloomberg New Economy, this collective spirit that we saw with the vaccine, and you're so right, that of, parties around the globe getting together, sharing research, science, medicine, especially in this race for a vaccine. If you think about if we can leverage this, whether it's to, deal with some of the major issues with climate change or other healthcare issues, just think about what we could certainly accomplish. Rich, sit tight for a second. I do have to do a little bit of news, but then we'll come back. We're talking with Rich Dizio. He is President and Chief Operating Officer of the Milken Institute, talking about the 2020 Future of Health Summit. So we'll hear a little bit more about it in just a moment. Let's get back to world and national news. For that, it's back over to Ed Baxter in San Francisco. Hey, Ed.
All right, Carol. Hey, Senate Majority Leader Mitch McConnell says the Senate will pass a one-week stopgap funding bill. Will get the U.S. through the week's end deadline. This is not the relief bill. It is just to keep the government open. More than 110,000 restaurants have closed permanently or long-term across the country. The National Restaurant Association says about 500,000 now are in free fall and need immediate congressional help. San Jose Mayor Sam Liccardo in Silicon Valley says businesses need help now.
The only real solution other than getting a vaccine in everyone's hands is getting federal money into the accounts of many of these small businesses.
And this with the governor of the state, Gavin Newsom, saying he's very concerned with a shrinking supply of hospital beds in the state.
ICU capacity, what's available in our ICU critical care capacity system is just 14.2% of beds.
And he says hospitalizations have increased 72% in the last 14 days. In New York, Governor Andrew Cuomo.
If your 7-day average shows that within 3 weeks you will hit critical hospital capacity, we close you down.
And Dr. Anthony Fauci appeared with Cuomo at his briefing.
Without substantial mitigation,
the middle of January can be a really dark time for us.
Now, President Donald Trump plans to host a vaccine summit tomorrow with some state governments, military, scientific community attending. Bloomberg is reporting now several drug companies are reportedly irritated by what they feel is a political event. Moderna has said that it will not attend. We'll see what happens. In San Francisco, I'm Ed Baxter. This is Bloomberg.
All right, Ed Baxter, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, and joining me once again is Charlie Pellet of Bloomberg News. And just when we don't have enough to worry about, Charlie Pellet, now we have to think about these 5G spectrum auctions coming up, which we need. Like, we're all looking forward to it. We've all been buying phones that have 5G capabilities, but apparently there's something maybe we haven't thought about.
Exactly, and you stole the words right out of my mouth when you said just when we don't have enough to worry about here. But the headline on the story on Bloomberg, written by our Todd Shields, Alan Levin, and Helen Fuqua, says the following: plane crash risk seen rising on an FCC expansion of 5G spectrum. The FCC is scheduled to begin an auction tomorrow for airwaves in the so-called C-band frequencies that are used by satellite providers, but the agency wants to reassign for 5G. A lot of people raising questions about this auction. The FAA says it is concerned about potential interference with altimeters. Right. Those are the devices on planes that tell you how high or how low you are, and is, quote, working closely with our interagency partners at the National Telecommunications and Information Administration and the FCC on this important issue.
Yeah, simply put, they're worried. There are some that are out there that are concerned that these frequencies, by assigning the frequencies to ground transmitters near airports, that they're going to be used for those 5G networks, that they could ultimately interfere with electronics used by aircraft as they land. Yeah, that got my attention. And the FAA is concerned about the potential interference as well. So I guess they're looking into it. The RTCA, which was formerly known as the Radio Technical Commission for Aeronautics, they've got this huge report, 217 pages, laying out some of the potential hazards. So I don't know. It's a 3-page story here at Bloomberg. There's a lot here, Charlie.
There is, and it had me just thinking back to the good old days when the biggest concern was the quality of the food on board aircraft. Remember those good old days?
Just like, would I get peanuts? Would I get pretzels? What would I get? Now I get nothing unless I pay for it. Anyway, it's a great story by our Todd Shields and team, so I'll put this out on Twitter. Charlie, thank you so much. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Toll Brothers, the home builder shares trading lower after earnings, down now by 1.5%. Fourth quarter revenue was a beat, $2.55 billion. Estimates $2.09 billion, but Toll Brothers has forecast deliveries for 2021 of 9,600 to 10,200. Estimates were for 10,030. Again, TOL on the ticker, lower now by 1.44%. Stocks fell today amid the virus surge. We've got the Dow, the S&P lower, NASDAQ a record. Let's begin there. NASDAQ Composite Index up 55 points today, up 0.5%. S&P fell 7, down 0.2%, retreating from a record. Dow Industrials down 148, a drop of 0.5%. NASDAQ 100 Index made it 9 in a row, up another 0.5%. 10-year yield 0.92%. Gold up 1.4%, $18.64 the ounce. And West Texas Intermediate crude today down 1.4%, $45.61 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Want to get back to our guest, Rich DeTizio. He is President and Chief Operating Officer at the Milken Institute. We're talking about the 2020 Future of Health Summit that is underway at Milken. It kicked off today and will continue through Wednesday. So, Rich, you were highlighting, Dr. Fauci. You heard from him this morning. We've all been kind of quoting what he said, and I feel like if there's a theme, we're all realizing it's going to get darker before things start to feel better when it comes to COVID. Tell us about some of the other coverage that you guys are doing over the week in terms of healthcare around the globe.
Well, I think some framing is probably a good idea. So if you think about the average drug in the United States, it takes about 16 years and almost $2 billion from the time a drug is developed until it's administered to a patient. So this has been an extraordinary global response. And I think it was different than the traditional timeline where pharmaceutical companies first have to know they have a successful product and then begin the manufacture of it. Here it required a different, faster approach, and we needed to do both concurrently. And that was fundamentally triggered by the money provided by the U.S. and other governments around the world. And now that we have some successful candidates that are showing some efficacy, we have to think through the logistical complexities. And a lot of what we're talking about over the next few days will be addressing that as well. The manufacture of vials and needles and the cold chain storage that's required.
Right.
And the fact that both the Moderna and Pfizer require 2 doses, not 1. So it's not, even though the science is making great progress, now we're going to start working on the logistics.
Right, the logistics, right? It's just a massive effort. Many people have said we've got to think about this as kind of a wartime effort in order to make sure that the necessary resources and activities and money is going to getting this vaccine out to everyone who needs it. And I do wonder, Rich, do you think that there's going to be an impact of what we went through this? I mean, of course there'll be an impact, but I do wonder, as time goes on, that we kind of forget the tragedies, the stresses that we all go through. We saw that to some extent after the financial crisis, but I do wonder, is there something that you think is going to be dramatically different when it comes to developments in the healthcare world?
I think so. And hopefully, to your point, we don't lose the lesson that's been provided by COVID, because COVID will end, right? I think there's a lot of optimism to look forward to. The challenge is, how do we keep some of this alive? And one of the things that we've done here at the Institute is launched an early warning system. We shouldn't have been caught so flat-footed by this. And I think we have the connectivity into people all over the world that can monitor and identify these emerging pathogens as they unfold. And one of the things we can help do is to keep in place some of the infrastructure provided by the NIH and others. So the NIH early on launched something called ACTIVE, which was accelerating COVID therapeutic interventions and vaccines. That infrastructure can be repurposed towards any number of other diseases. And it's not as though COVID came along and cancer and Parkinson's and everyone else went on holiday. There's plenty of diseases to work on, and I think we can leverage some of this existing structure to do so.
Yeah, I mean, just think about it. Like, could we just target many of these illnesses and diseases that have really plagued us for a long time and just wonder, what we could get on the other side of this. What about telemedicine? That's got to be a big part of what you guys are covering as well. I think I saw some sessions that were talking about that.
Yeah, there's a number of those. And I think, like other things, the social adaptation of telemedicine has been quick. If 5 years ago, people were very hesitant to talk about their medical conditions with a physician over the internet, and today, because most of the world is remote over Zoom and other platforms, it just seems the norm. So I think that has been, and in places like sub-Saharan Africa and parts of India, where there isn't a healthcare infrastructure to leverage in much of those nations, telemedicine is likely to be a key to the future.
Yeah, I mean, you think about how that could be changing, especially if you think about communities that don't necessarily have access to physical healthcare facilities, how telemedicine can be a game changer. What about, listen, you guys have talked about it a lot, I know that, and we have as well. It's not just been one pandemic, it's been dual pandemics, right? We've been dealing with a healthcare pandemic. We've been dealing with, racism and concerns about inequities in our society. How are you guys going to be covering that, the racial, inequities or diversity and inclusion more broadly in some of your discussions?
We are keenly focused on that, as we have been through the global conference in October. The pandemic has disproportionately affected communities of color, as you know, and I think that part of it, if we start at the beginning on what are the social determinants of health, historically, there's been a lack of diversity even in clinical research. So we don't have people of color. We often don't have women. Most of what we know about heart disease is from studying white men over the years.
Yeah.
So I think as we start to think through who is participating, who's getting sick and why, and what can we do about it, I think, and then you take it another step and you think about in those same communities, with school being largely remote, we have 12 million children in the United States that have no reliable internet services or devices in the home. They go to Burger King parking lots to try and access their education today. So I think it all is connected, and that's the part that we try to present, is that these things seem very distinct in nature, but in fact they're all very, very connected. And until we start addressing these issues and understand how social justice plays into healthcare outcomes, we're going to be stuck.
Right. It's tremendous. And let's hope we learn from this, as we were talking about, both you and I earlier. So, Rich, I also do wonder about, and this is something where you guys are, you've been in it for years, this whole idea of public-private partnerships, right? I mean, governments can't do it alone, private sector can't do it alone, but we do need the support, whether it's the private sector or also through philanthropy. I think about all the work the Gates Foundation has done, certainly over the years, and has been, kind of ringing the bell about pandemics for a long time, and yet not necessarily everybody got the message. What do you see and how significant that's going to be in terms of dealing some of what we just talked about?
I think that philanthropic capital is very catalytic towards the beginning of a lot of things. So if we think about problems generally, philanthropic capital could move most quickly because it's quite agile and immediate. So early on in the pandemic, the need to get PPE out into the communities, not just here in the United States, but globally, philanthropy largely carried that because the governments just are more cumbersome in the time it takes to deliver that aid. So you see that across a spectrum of issues. The philanthropy can kind of step in early. Then there's some sort of commercialization of what's going on that involves the business community, as you're seeing through all the large pharmaceutical companies, the manufacture of vials, et cetera. And then the largest of problems necessarily need governmental intervention because they have the distribution that they can get the cure out to millions of people. So if you think about that as a continuum, often philanthropy can take that first catalytic role towards what the ultimate solution is going to be.
It's just fascinating. Listen, I hope we can come back and talk with you maybe after it's done too, and maybe get some of the big takeaways from it, because these are important issues and these conversations have to be had, because ultimately these are the conversations that lead to game-changing actions. Rich, thank you so much. Really appreciate it. Rich DeTizio, he is President and Chief Operating Officer of the Milken Institute, on the phone from Santa Monica. As I mentioned, the Milken Institute 2020 Future of Health Summit getting underway today and continuing through Wednesday. You can check out more if you go to the milkeninstitute.org website. You're listening to Bloomberg Business Week. Carol Masser, and coming up, we're going to talk a little bit about commercial real estate, and then we've got a fascinating guest too for our last 30 minutes. Stick around.
Bloomberg World Headquarters. I'm Charlie Pellet, keeping an eye on Stitch Fix shares. After hours, they are surging. Fiscal first quarter profit and revenue beat analyst estimates. It has also hired an Amazon veteran as chief financial officer. Stitch Fix shares surging now by 37%. Toll Brothers reported better than expected order growth, a sign that home buyers rushing to the suburbs during the pandemic are fueling a boom in luxury sales. Shares after hours down now by 1.8%. The two pharmaceutical companies closest to gaining U.S. clearance for a COVID-19 vaccine, Pfizer and Moderna, will not be attending a planned White House summit tomorrow intended to build confidence in the shots. A source familiar with Moderna's plan says FDA officials are expected to appear at the meeting, and it would be inappropriate for the drug maker to attend while its application for authorization is under consideration. It was a mixed picture for U.S. equities today. We did see the Dow Jones Industrial Average and the S&P both lower, retreating from records. NASDAQ up 55. That was a record today, 12,519, a gain of 0.5%. But stocks fell as coronavirus infections swept across states, triggering fears of more restrictions. As for the overall market backdrop, Richard Bernstein is Chief Investment Officer at RB Advisors.
I think you've got this kind of weird tug of war going on between the virus and the reality of a national emergency, which I don't understand why people won't call it a national emergency. That's really what it is. And on the other side, you've got this massive monetary stimulus. And so, to date, the monetary stimulus has been winning. It's been beating the virus. But for the stock market, that's kind of what's going on.
10-year up 13.30 seconds, 10-year yield 0.92%, gold at $18.62 the ounce. West Texas Intermediate crude down 1.4%, 45.63 a barrel. Oil lower alongside weaker equities as attention turned back toward near-term lockdown risks and supply concerns. Checking some of the major oil industry stocks, ExxonMobil lower today by 1.8%. We saw shares of BP today, BP down 2.65%, EOG Resources down 2.7%, Pioneer Natural Resources lower by 3.3%. So it was a down day on Wall Street. S&P recapping down 7, a drop of 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser on Bloomberg Radio.
So you are listening to Bloomberg Business Week. It is Monday. I'm Carol Masser, back at Bloomberg headquarters in New York City. We love talking about real estate. And if you remember, Tim Stenovec and I earlier, Tim, of course, of Bloomberg Quick Take, talked earlier about a story. It's among the most read on the Bloomberg about Manhattan luxury home buyers are coming back and they're being lured by deep discounts. So tenants definitely in the driver's seat right now. Let's bring in Michael Silver. He's chairman of Vestian. It's a commercial real estate firm that serves only occupants of buildings, never landlords. It's an interesting take and perspective on all of this. He joins us on the phone from Chicago. Michael, great to have you here on Bloomberg.
Thank you. Thank you.
Hey, first of all, how are you doing? How's Chicago?
Are you talking about the commercial real estate market?
Well, first, just talking about COVID and the general backdrop.
COVID is, we're all kind of quarantining.
Yeah, it's pretty tough.
I think the daily rates of COVID have gone down a little bit, but we're at the height of it right now.
Yeah.
So we're just everyone's kind of hanging in there.
Well, it's tough, and I feel for you. And we're watching very closely here in New York, having been through a crazy time, obviously, and really tough time in the spring. What are you seeing as a result on the real estate markets?
Well, if you're talking about overall, it's probably the worst commercial real estate market since the dot-com bust. Probably surpassing the dot-com bust, and it's probably the worst commercial real estate market. Certainly, there's more vacancy than there was as a percentage of the overall supply than there was in 2009 in the recession. So it's going to get worse. And so, for example, in the U.S. has a 4 billion square foot supply of office space.
Mm-hmm.
We're starting to exceed overall 16% vacancy overall.
Mm-hmm.
That's never occurred. Occupancy dropped in the U.S. so far this year at around 30 million square feet, and it's predicted to drop around 50 million square feet. And in terms of sublet availability, there's 150 million or 160 million square feet of sublet available throughout the United States, headed towards 200 million square feet of availability of sublet. It's never occurred before.
So how do we digest that, or you don't?
You just don't. I don't. I really, there's enough supply in the marketplace in order to mop up all the vacancy that's predicted. There's about a 7-year supply. So I just don't think it's going to get back to any kind of state of equilibrium for at least 7, maybe 8 years.
So what does that mean? Because I feel like I'm looking for a story, and I'm going to find it as I talk with you. But
sure.
I do feel like it hasn't necessarily played out yet